Even though the company made the statement back in early November, virus deaths hit a record in the United States and Italy. And finding a compromise, OPEC Plus agrees to slowly add more oil next year after days of tense talks. Saudi Arabia's energy minister called the process excruciating. Welcome back to the European Market Open then. Just a few seconds to go until the start of the European equity market session for this Friday morning. Once again, we made it to Friday, everybody. So Euro Stoxx 50 futures do suggest a little bit of downside overall. FTSE 100 futures look fairly robust, though. Could that be the oil difference? So we've got oil prices moving to the upside by 2% on Brent, 49.70, driven higher by at least some certainty around what the production outlook will look like at the start of 2021, even if there could be further uncertainty, further volatility with all these meetings scheduled for the rest of the year. But at least to start with, there will be some certainty around production, and so that is what the markets seem to be reacting to. Let's get to the European equity markets then and how they are opening up, and that is the operative word in terms of the FTSE. So the FTSE 100 up by around 0.5%. The CAC 40 yet to open. The Xetra DAX is down by around 0.1%. The IBEX fairly flat this morning. Just pulling up the FTSE 100 to see what exactly is leading it to outperform this morning, and we wouldn't be surprised maybe to see some of the oil names in there, and in fact we do. BP is up by 1.9%, Royal Dutch Shell up by 1.7%, AstraZeneca actually doing well today, up by 1.7%, and GlaxoSmithKline as well. So we do see some appetite for big oil, also big pharma. Now, European markets then opening fairly mixed, actually. The UK outperforms, other markets a little bit more sluggish, and that's as investors weigh the recent strength in global equities and await key data from the US labour market. Joining us now for our conversation is James Athey, Aberdeen Standard Investments Investment Director. James, really good to speak to you this morning. Thanks very much for joining us. So as we come to the end of 2020, we're not quite there yet, but you know, time is ticking and we're getting towards 2021. Are you very focused on the better outlook for next year? Do you think markets will, by and large, manage to navigate what could still be a very gloomy and fairly tragic winter in the Northern Hemisphere? Markets will manage to navigate that and focus on the bigger prize, on the more positives, the vaccine.
Morning, Anna. Yeah, I mean, that's definitely what markets are attempting to do. And realistically, certainly the equity market in the US has been attempting to do that really since the nadir of this most recent of crises. So I've read recently that equities are the most forward-looking asset class amongst them all, which I find strange given that, you know, in the middle of February, equities were priced for perfection when there was quite a lot of evidence that that's not what we're going to see. So it's a bit of a self-fulfilling prophecy, really. I think people are desperate for positivity and therefore are biased to see positivity wherever they can, and to some degree putting aside any of the potential risks around that positive view. So sentiment is unquestionably bullish with respect to the long-term outlook, and indeed with respect to what that means for returns from risky assets. I'm a bit more circumspect, a bit more concerned, not just because we have to get through this difficult winter, but because, to me, really, the idea of returning to the status quo ante is not a reason to cheer. I didn't see the economy at the end of 2019 as being healthy. I saw it as being fragile, imbalanced, and really struggling towards the end of what was quite a long and distorted economic cycle. So at the moment, I feel quite alone in in that view. I think most investors would say that the vaccine and the receding virus as we go through next year are reasons to continue buying risky assets really at any price.
Okay, James, let me ask you a little about valuations. You mentioned those there, and I've been looking at the cyclically adjusted PEs and the ratio of that with the S&P 500. If you look at that ratio, you get quite quickly up to levels that look a bit scary in terms of valuations from some perspectives, by some historical comparisons, certainly taking us back to not levels of the dot-com boom, but above levels of 1929, for example. How concerned are you around valuations then in these risk assets, or specifically in US equities?
Yeah, definitely US is more egregious, and the US is not more egregious necessarily on a broad basis. It is what we observe in terms of equity market valuations really is largely a function of distortions in the overall valuation picture coming from a small number of huge companies which are priced at really eye-watering valuations. That being said, I still think valuations across the piece don't necessarily appear to be taking into account the balance of probabilities and risks and the underlying economic picture. There are a couple of quoted reasons for that. Obviously, one we know about and we've been living with for a decade or more, which is endless central bank support and the idea that this is a liquidity trade. Liquidity is pumped into the market and that floats all boats, and there's pretty good prima facie evidence for that. The other really is that low interest rates drive net present values to be higher, i.e. the discount rate used to discount future earnings for equities. It leads to a higher present value and therefore a higher share price. And the evidence for that is much more mixed through history and across the globe. We really haven't observed that as being a factor in Europe or Japan, for example, where we've had incredibly low interest rates for much longer, and yet we've seen equity multiples languishing in the doldrums. And the reason for that, in my opinion, is because those interest rates reflected a very negative growth outlook. And of course, that should weigh on equity earnings into the future. So at the moment, we've got this kind of perfect storm where everybody's forecasting a rapid rise in earnings and justifying paying incredible multiples for those earnings on the basis that interest rates are low. I don't think that's a particularly stable equilibrium over the long term. I think that's a bit of a post hoc justification. I would suggest that, this time is different is always a dangerous phrase to be uttering. And history says if you buy equities when multiples are, say, 25, 28-ish on the S&P at the moment, or as you quoted, looking at the Cape, something approaching 32, 33. History says if you buy equities there, you should expect a low or even negative long-term real and nominal return from that investment.
And James, talking about the relationship then between equity markets and interest rates, I know you're focused obviously on the curve, and you say that duration offers value. We have seen a bit of curve steepening. What is that telling you at this point?
Yeah, it's a really interesting one. I mean, it gets glibly, I think, called a reflation narrative, and we have seen break-evens rising, certainly from very low levels again back in March and April when we had the main market shock. Whether or not that really is justified by the economic outlook, the actual underlying inflation outlook, again, I think is somewhat questionable. Really, what we've seen is break-evens correlated with risk assets. It's one big trade. It's a risk-on trade, and it's driving, dollar down, commodities higher, equities higher, bond yields higher, curve steeper, and that gets called a reflation trade. Again, whether or not that is sustainable, firstly, because the economy has become accustomed to very low rates. There's a heck of a lot of debt anyway. There's even more debt now, and rising rates obviously crimps on people's abilities to service that debt, and that is essentially robbing from the economy to pay debt, instead. And so rising rates do become a problem and will become a problem more quickly in this current environment than we would have been used to historically. Where that line is, it's difficult to say. And of course, central banks, what we're seeing really is central banks shifting from dual mandates towards much more narrow mandates, which are in large part ignoring inflation to a certain degree. What they're saying is that they're promising to be somewhat credibly irresponsible, and that means they want interest rate policy, monetary policy in general, and financial conditions in general to be easier than the economic situational outlook would justify. So I don't think they particularly want the market to front run future economic improvement. Actually, they want quite the opposite. So I do think, the ECB is essentially operating a de facto yield curve control policy. The Federal Reserve has been a bit more cautious. I think they want to see what fiscal policy can produce, but I don't think the Fed wants to give the market any indication that the yields could run considerably higher from here. So I do think there is a Fed backstop for yields. We just don't really know where it is.
Right, we don't. And from what you've said about inflation there and the way that the markets glibly refer to moves in yields as a sort of reflation trade, and thinking about how difficult it was even before the pandemic to talk about generating sustainable inflation in Western economies, do you not see inflation coming, James, as a big either threat or opportunity for investors?
Yeah, I mean, it is both a threat and an opportunity, I think. I mean, that's, I think, the biggest question out there, and there are good arguments on both sides. Realistically, what we've seen is a massive negative demand and supply shock, but I think the demand shock dominates. So we've seen huge rise in output gaps. As a general rule, economic models would tell you that that is deflationary or disinflationary, and I would broadly agree with that notion. That being said, there are some other factors which are definitely pushing on the other side. We've seen more coordination between monetary and fiscal policy. That's meant that more money that has been printed has found its way into the economy relative to the financial sector, or at least there is a transmission for it to get to the economy more easily than QE we saw for the last 10 years, which was entirely locked up in financial asset inflation. And also once we get through Q1 next year, you start to have base effects, for example, on oil, which are going to look incredibly inflationary. If, for example, the US dollar continues to fall, that generally tends to raise import prices. And so you could have this little perfect storm that leads to a bit of an inflationary shock at some point in the middle of next year. And that could be somewhat destabilizing for markets. The big thing economically and really big picture here is that unless wages go up, inflation is the last thing we need.
Okay, James, thank you very much. James Athey, Aberdeen Standard Investments Investment Director. He stays with us for the further thoughts from him shortly. Just to let you know, the European Council President, Charles Michel, is holding a news conference. We're monitoring headlines. He seems to be talking about the impact of the US election on the transatlantic relationship right now. The US election result opens the path to new relationships. Of course, we'll keep an eye on anything he has to say about the domestic European story as well, the rule of law debate and the recovery fund, the link between the two, and Brexit, of course, key topics in Brussels. We'll see if he references those at all. And talking of Brexit, coming up, breakthrough or breakdown. Brexit talks hit a last-minute roadblock as the UK warns over fresh demands, but EU officials deny having made any fresh demands. More on this next. This is Bloomberg. Welcome back to the European market open. 13 minutes into Europe's trading day, and the London market up by 0.5% or so. The Xetra DAX underperforming. The CAC 40 also making some decent gains. They're up by 0.4%. Oil is higher. Oil up by more than 2% on Brent, 49.73. That lifts oil majors. Let's get a Bloomberg Business Flash. Here's Laura Wright.
Thanks, Anna. Pfizer scaled back its vaccine production targets earlier this year after it ran into difficulties securing all the materials it needed. It had originally promised up to 100 million doses this year, but now says the target is 50 million. A spokesperson for the company released a statement saying the scale-up of the raw material supply chain took longer than expected. Morgan Stanley is handing out a special one-time bonus for lower-paid workers as the firm heads toward a record year. The bank will give around half of its 30,000 global employees a one-off payment of $1,000. The benefit adds to Morgan Stanley's promise that it will not cut its workforce this year despite the fallout from COVID-19. That's your Bloomberg Business Flash. Anna.
Laura, thank you very much. Laura Wright with the Business Flash for us. Keeping an eye on Brexit headlines, looking at this press conference taking place in Brussels with Charles Michel, EU Council President, to see if we get any lines around Brexit. Thinking about the Brexit latest, trade talks were said to be on the verge of a breakthrough until negotiations hit a last-minute snag. British officials say the European Union had suddenly turned up with a new set of demands. They didn't say what the demands were, and EU officials denied having turned up with a new set of demands. James Athey, Aberdeen Standard Investment, is with us, where he's investment director. I won't ask, we won't dwell on these last-minute demands because we'll see where that takes us. But in terms of the investment story around this, James, you're short sterling. Are you short sterling because you think there's going to be no deal, or are you short sterling because you don't really think a deal matters and you're just short sterling anyway in terms of 2021 prospects? I mean, what's the explanation?
Yeah, the negotiations, in my opinion, really don't seem to have gone anywhere for 3 months. We repeatedly have heard from either side of the debating team that we are increasingly approaching a deal. We are increasingly approaching agreement on some of those subjects which seem to be sticking points, only to find, a day later, somebody else from within the negotiating process saying that actually those issues remain outstanding. And what seems to be happening now is a bit of a disconnect between the EU negotiators and some of the member states. So, first and foremost, whatever deal we get here in the next couple of days, if that's where we're heading, 18 months ago, I think the market would have described as a cliff edge Brexit and would have been absolutely terrified about. So sentiment has seemingly shifted, and I'm not quite sure why. We're essentially short sterling because we felt that the market was far too sanguine about the economic impact of any deal that would come, and B, far too sanguine about the prospects of a deal coming. I still have, it's very difficult to apply subjective probabilities, but I still have it really as a coin toss as to whether we get a deal. And it really does feel like if there isn't one by this weekend, then that is it. That seems to be what the UK side has said this morning. So really the short in sterling is twofold. One, it's because the market is overpricing the prospects of a deal, and two, it's overpricing the benefits, if you like, of the kind of deal that we're likely to see. I mean, financial services equivalence is not even in the discussion, which I find somewhat strange.
Yeah, indeed. Financial services, some 7% of the UK economy, of course, and fish much smaller, as we know. We're just watching these lines coming through from the EU's Charles Michel saying that negotiations with the UK are still ongoing. Member states will have to weigh in on Brexit. He does, though, confirm trust in chief negotiator Michel Barnier. Let me ask you about how you position in other things. There he is, Charles Michel, giving that press conference. Away from sterling, what about gilt markets? What about FTSE versus 250, James? How are you positioned there?
Yeah, I mean, the gilt market doesn't seem to pay too much attention to what's going on in Brexit. Definitely sterling, I think, is the market's favoured expression for Brexit good, Brexit bad, progress or not. Gilt, really, I think, so heavily dominated by what the Bank of England is doing. And while the Bank of England is, of course, sensitive to what happens in Brexit, the Bank of England also has many other issues to deal with. Definitely the UK economy has suffered more than most as a result of the coronavirus pandemic. partly possibly because of government policy, but I would also argue because just the makeup of our economy makes it quite susceptible, very service and consumption dominated, and when there are no interactions, that's very difficult. So gilts we still like to own here.
James, thanks so much. Thanks for coming to talk to us this Friday. James Zaff, the Aberdeen Standard Investments Investment Director. James continues his conversation with us on Bloomberg Radio, 9 a.m. UK time. Coming up, Boeing signs a landmark deal with Ryanair. We'll bring you our interview with the CEOs of both companies next. This is Bloomberg. Welcome back to the European Market Open. 21 minutes into a fairly positive trading session for European equity markets. Boeing soared on Wall Street yesterday after sealing a landmark order from Ryanair for 75 of its beleaguered 737 MAX jets. The deal boosts the plane maker's efforts to revive its best-selling model after a 20-month grounding. Bloomberg's Guy Johnson spoke to the CEOs of both companies about why Ryanair is making the commitment now.
I'm absolutely convinced this is the time and this is the moment. You know, Boeing have gone through a torrid year with not just the grounding of the MAX, but the impact of COVID as well. I think you look at the work that Dave and the team in Boeing, the regulators, Steve Dixon here in the FAA, Patrick Key and the team in Europe and EASA have done. This is the most audited, most regulated, safest aircraft ever to be delivered. And remember, this aircraft's already flown for 22 months before the tragic accidents that befell it. So, you know, 47 million people have already flown in a Boeing MAX aircraft. But the systems have been redesigned, they've been upgraded, there's comprehensive training. Ryanair, we have 3 MAX simulators already up and running in our Dublin and Stansted bases. We've put our pilots through it, they love the aircraft performs brilliantly, and we were heartened, I think, by the very strong support that Patrick Key and EASA in their statement in Cologne on the 24th of November gave to the work that Dave and the team in Boeing have done. It's a great aircraft, it's a safe aircraft. We can't wait to take delivery of these planes, and we know that our customers are going to enjoy flying on them as early as the summer 2021.
Dave Calhoun, let's pick on some of those points and discuss them a little bit further. You have got an awful lot of aircraft, 737 MAXes, parked on the lot right now. The ones that Michael are ordering are actually not those aircraft. They're not ones that are currently built. They're going to be, I understand, new ones. They're Ryanair variants. What are you going to do with the aircraft that you currently have sitting on the lot? And are you going to make any money, considering it's such a buyer's market now for 737 MAXs, off the transaction you've done with Michael?
Yeah, so the forecast for depleting that inventory is roughly a 2-year time frame, and we're confident that that can be done. The most important thing about the economics associated with that inventory are sort of when you do it, how patient can you be as you live through this recovery. We have incredible faith in the recovery of the industry, and if anything, relative to the early projections that we made with respect to recovery, this vaccine development, the potential global distribution of that vaccine over the course of 2021, if anything, accelerates our view of recovery and the faith in that recovery relative to where we were when we began with the COVID crisis. So we are actually building more and more faith, which means we'll be more and more patient. It will still take us 2 full years. I'm confident of that. And we have enough liquidity to allow for that. And so that's the way we're playing it. What I am very confident in, and I think what this order is a testament to, is the value of the airplane to the airlines and the performance that it gives them. Michael's model, low cost, low fare, is the model that is creating the growth track that our industry has enjoyed for so long. It allows for more passengers. It introduces more passengers to the industry. It spurs tourism, all those good things. For him to select this airplane based on its performance day in and day out is a testament to that value. And that's what we will have to hang our hats on.
Michael, positive words there from Dave about the outlook in terms of demand, but I've just looked at your November traffic numbers. They were out yesterday. They were down 82%. Isn't this purchase a little out of kilter with anticipated demand at the moment? Why are you putting your balance sheet at risk? And is there any flexibility in the terms of the deal if demand does not come back as quickly as you anticipate?
Actually, there isn't, and nor do we need that flexibility, Guy. I mean, there's a couple of things. You know, clearly our November traffic, we were down 80%, but, you know, Europe has, through September, October, November, has been in a second lockdown. Look, I think by the time we get into the new year, the vaccines are coming. They've already beginning to be licensed. You know, travel is going to snap back very strongly.
That was Ryanair's Michael O'Leary and Boeing's CEO Dave Calhoun speaking to Guy Johnson. Really interesting to hear Michael O'Leary saying, no, there isn't much flexibility around this deal. The deal is the deal there for those Boeing jets. Up next on the programme, after Giuseppe Conte's top advisor calls for the ECB to cancel pandemic debt, we'll speak to Italy's EU Affairs Minister, that is Vincenzo Amendola. That conversation next, here on Bloomberg. Welcome back to the European market. Open 30 minutes into a trading session that looks increasingly positive, actually, for European equity markets. Oil prices going higher, of course, helps some oil stocks. US futures also point to the upside, up by around 3 or 4/10%. Let's get a look at some of the big stories we're covering here at Bloomberg this morning. For a Bloomberg First Word News update, here's Laura Wright.
Thanks, Anna. Brexit trade talks said to be on the verge of a breakthrough have hit a last-minute bump. The British government said the prospect of an imminent deal had receded, blaming the European Union for suddenly turning up with a new set of demands. Senior figures close to the European side questioned whether the remarks were intended to pile last-minute pressure on the talks. Anthony Fauci, the US government's top infectious disease specialist, has rode back on earlier criticism of the UK's rapid approval of a COVID vaccine. He said he didn't mean to imply any sloppiness after describing the UK process as, quote, really rushed. President-elect Joe Biden, meanwhile, says he will ask all Americans to wear a mask to prevent virus spread during the first 100 days of his administration. The OPEC Plus group of nations has agreed to ease planned cuts in oil output next year, pumping an extra 500,000 barrels a day from January. The deal comes after almost a week of fraught negotiations that exposed a rift at the heart of the cartel. Producers also decided ministers will hold monthly consultations to decide on the next steps, a much shorter time frame than usual. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna.
Thank you very much. Thanks very much, Laura. Laura Wright here in London. Now, the ECB is expected to extend asset purchases and cheap credit for banks to support the economy until vaccines are widely available. That is according to economists surveyed by Bloomberg. Respondents expect policymakers to add 6 months and 500 billion euros to their emergency bond buying program when they meet virtually on December the 10th. The big question, and interesting to get an Italian perspective on this, is what should happen to all that debt sitting on the ECB's balance sheets. Let's go now to Maria Tadeo, who joins us from Brussels in conversation with a guest.
Right, Anna, we're joined now by the Italian Minister for European Affairs. Joining us from beautiful Rome, it's Minister Vincenzo Amendola. Thank you so much for being with us, Minister. I have to ask you, going up on that point about the European Central Bank, a very simple yes or no answer. Are you in favor of opening up a debate to cancel some of Italy's debt?
We work with the treaty, and so we are following the treaty regulation.
Okay, so you work with the treaties, and you know very well that the treaty says that is not possible, that's not doable. So essentially what you mean is that Italy is not floating this idea, it's simply not doable.
Our government is moving according to the treaty and is working with the economical stimulus in order to boost the growth, because more we are going to boost the growth, thanks also to next generation of fiscal policy based on the European Union. We are going to decrease the debt, and we work always on the sustainability of the public debt.
Right, so it's about growth and it's about debt sustainability. But I have to ask you, just to wrap up on this issue, how unanimous is this line of thought among the Italian government? We've heard there's a number of opinions, some who actually think this is a fair debate.
There are many opinions around the European Union, but we work according to the treaty. We work according to the agreement that we signed all over the European Union with the European Commission. So this is the main track where we have to work in a difficult time like we are living.
Okay, so that line is clear. Italy is going to follow the treaty. And Minister, I have to ask you about next week, because this is looking very busy. When you look at the situation right now in Europe, what worries you more? Is it Viktor Orban or is it Brexit?
But the Hungarian and Polish veto, I think, is a huge responsibility that they are taking, of course, because they are blocking an agreement that is very important for the European economy and also for the Hungarian and Polish economy. So this is our problem on the timetable that we signed. Brexit, as usual, Europe is very united. We are backing our delegate Michel Barnier. He has our full trust, confidence to negotiate on the basis of the European regulation.
And Minister Amendola, I'm sure you've been watching or listening to Viktor Orban this morning, where he says that he doesn't really see a compromise at this stage. Is he going to double down on this? And if he does, do you see a plan B where you just put Poland and Hungary aside?
No, there is just one plan A. the rule of law, the Article 2 of the treaty is our ID, is the European ID all over the world. So we cannot negotiate on our ID.
Okay, and when it comes to Brexit, there's another potential veto. Today, the French Europe Minister, Clément Beaune, who you know very well, was saying that France has a right to veto if they believe the ultimate deal is a bad deal for the country. Are we going to get to that point?
It depends on how the negotiation is going on. Of course, for example, the issue of fisheries is not just a French issue, it's a European one. So Michel Barnier has a clear file with all our requests that are based on our market union regulation. So has all the instruments to speak on behalf of the European Union. That is very united in this negotiation.
Right, and how much faith do you have on Michel Barnier? He's been negotiating for this for years now. Do you have blind faith in him? He's going to come back home with a good deal?
He's a wonderful negotiator. And when a negotiator has also the unanimous support of the European country, I think he can do his job like he always done in the past.
Right, and looking forward specifically now when it comes to Italy, there has been a lot of back and forth as to whether we could see delays to your next generation EU plan, as to whether the Commission is pushing you to provide this plan. When are we going to see it?
But we are well on track, as Ursula von der Leyen said 2 weeks ago. We are working with the task force of the European Commission because we want to follow the agreement line, the guideline. We want to invest all together in the same rules. As the Italian government, next Monday we have a cabinet meeting to upload and to update the guideline that we presented to the Commission. And we want to, as soon as possible, to install with the law, of course, that we present in the Parliament, the executive body for the implementation of the plan. When the money, the first disbursement are going to come next year, we want that already the task force and all the regulation is ready, because we have no time to lose in terms of investment.
Right, and you say you have no time to lose, but let's just imagine this recovery fund is delayed and you are spending a lot of money to prop up your economy. If there's a delay, is that pushing you ultimately very close to the ESM?
We're working all together with the European Commission. All the economical and fiscal policy is common at the European level. There is a good front line together between Commission, European Central Bank, the European Council. So this is the European Union that is working and, of course, is giving strength to all the different countries. So we are working in this direction, and this is the line that we want to follow.
Okay, Minister, just a very final question, very briefly. Is it a good idea to go skiing this winter?
Look, our position as Italian government, together with other countries, is that we have to avoid in all the way the third wave of COVID-19. So we have to make sacrifice. We are asking sacrifice to our people. Just now that the second wave is decreasing, we don't want that during the Sylvester vacation, there is the possibility of it coming back to other sacrifice. So let's do a work with a prudent way. Let's be clear with our citizens that we are going out from the tunnel, and the third wave has to be excluded from the beginning.
Okay, well, Minister, grazie tanto. Thank you so much for your time. That was the Italian Europe Minister, Vincenzo Amendola, on Bloomberg Television this morning. Anna?
Maria, thank you very much, Maria Tadeo, with that interview covering a lot of ground there with the Minister from Italy. Let's focus in on something else. Both the new PlayStation and Xbox look set to be hot sellers this holiday season, if you can get your hands on any. Up next, we'll talk gaming with Green Man Gaming CEO Paul Suliok. That conversation next. This is Bloomberg. Welcome back to the European Market Open. 42 minutes into a trading session that looks increasingly positive. The FTSE 100 up 0.7%. Oil majors doing pretty well this morning, up by more than 2% on the Brent price, 49.81 after that OPEC Plus deal. Let's get a Bloomberg Business Flash. Here's Laura Wright.
Thanks, Anna. Pfizer scaled back its vaccine production targets earlier this year after it ran into difficulties securing all the materials it needed. It had originally promised up to 100 million doses this year, but now says the target is 50 million. A spokesperson for the company released a statement saying the scale-up of the raw material supply chain took longer than expected. Morgan Stanley is handing out a special one-time bonus for lower-paid workers as the firm heads toward a record year. The bank will give around half of its 30,000 global employees a one-off payment of $1,000. The benefit adds to Morgan Stanley's promise that it will not cut its workforce this year despite the fallout from COVID-19. Delta Airlines is warning cash losses for the current quarter could be deeper than expected as the coronavirus continues to undermine air travel. Delta now expects to burn up to $14 million a day, up from an earlier forecast of $12 million. The airline says revenue will be 30% less than for the same period last year, in line with earlier estimates. That's your Bloomberg Business Flash, Anna.
Laura, thanks very much. Laura Wright with your Business Flash. Now, both the new PlayStation and Xbox look set to be hot sellers this holiday season. The sought-after products have been flying off the shelves, with online speculators charging many times more than their original sales price. The video game industry itself has been thriving this year, with COVID-19 lockdowns fueling unprecedented demand. Where does that lead us as we head towards the end of the year for the sector then? Joining us now is Paul Suliok, Green Man Gaming's CEO. Paul, really good to speak to you. So you sell games, you make games, you promote games. I wonder how having two new consoles coming out at this point and the shortages we're seeing around them, is that a normal state of affairs when you see these new consoles being released, or is it pandemic related? And how is that impacting on your business on the software side?
So from a hardware perspective, it is absolutely normal when you go through the cycle into two new platforms hitting the market, that there are shortages. And what we'll see is probably for the first quarter and the second quarter calendar year next year, the market will catch up with having these two new consoles. Now, from a software perspective, and of course, Green Man Gaming sells games in 195 countries around the world. We're in 11 different languages, 18 different currencies. We very much are on the pulse of video games that are coming to market and the performance of those video games in the global market itself.
Let me ask you about you sell globally, 195 countries, you said, and tell me about where in particular you've seen strength and strong demand this year, because of course where people have been more locked down, you would expect to see that, and it seems to depend on where people play their games. Interesting dynamics about where people play them, in the home or out of the home.
Absolutely. So when China went into lockdown earlier on in the year, we forecast that the actual game sales were going to go up significantly in the Chinese environment. Actually, what happened is that the sales there plateaued. And we had to take a step back and think, well, why on earth was this happening in the Chinese environment? But the Chinese, and many Southeast Asian nations as well, tend to game in a communal LAN cafe area with their friends on an ongoing basis. So actually, because they don't have a huge amount of personal space, what they ended up doing was playing more mobile games and less console and PC-based games. For Western Europe and for the US, we absolutely saw a huge spike in sales across the board during the first big lockdown, because fundamentally people had a great deal more time on their hands in order to be able to play games, in order to be able to interact with their friends using a game as a social medium as well.
And tell me about the different ways that you can charge for games now. There are subscription models, maybe they're more emergent, and then of course there's the just paying for each game individually. What are the pros and cons, and which is sticking?
So subscription model is a great model if you happen to own your own platform. So Sony and Microsoft both have their own type of subscription model, which works very, very well for their gamers. However, for the industry as a whole, the ability to be able to have AAA games or large budget games like Call of Duty come out and actually hit the market as a premium title allows publishers to be able to invest a great deal more in the actual games themselves on the run-up to launch.
Who's the target audience for gaming now, Paul? And I mean, I could ask you this at any time, but I ask you specifically this year when we've, of course, had the year we've had and the lockdowns that have taken place. I wonder if that has increased the definition of the target audience. And I also ask this because I was on your website yesterday and looking at a host of games, many of which still have guns and weaponry on the advert at least. So tell me, who is the target audience, and is that shifting?
The target audience is shifting as time moves on. 46% of all gamers globally are now women. So it's no longer a male-dominated pastime. It's very much an evenly spread pastime. So if you play Bejeweled on your phone, or you play Call of Duty, it's immaterial because you are still a gamer. You are interacting with the gaming medium and interacting with other people online who are also playing the same game potentially.
And tell me about the Brexit negotiations and how that might impact on a business such as yours. You're selling software, you're selling it globally. Some of it, I imagine, is physical, and some of it is selling a sort of software code that then allows people to download that software themselves. So Brexit negotiations, help us take something that seems quite removed from the purchases we might make. How does that apply to a business such as yours? What are you waiting to hear about?
Listen, Greenman Gaming is a 100-person company. We're a fast-moving technology company. We are very, very lucky in the fact that we sell our games globally, and we're a pure digital company. So something like the hospitality industry has been very, very badly hurt through all the lockdowns. Gaming has done very, very well. What I would say, however, as an entrepreneur and as a CEO of a UK-based company, is that I see the role of government is to provide stability and certainty for entrepreneurs like myself and business leaders like other business leaders in the country to be able to make decisions and to be able to plan going forward. The challenges that we've got right now are we don't necessarily know what the next steps are going to be. We don't even know what the next steps are going to be in the next 48 hours, let alone in the next 2 years. So it's very, very difficult for us to plan ahead and understand exactly how we can position ourselves in the market and in the global arena in order to be able to be as successful as we would like to be.
So are you uncertain as to the terms you'll be able to trade in Europe come January the 1st, and also uncertain on the terms of trade with other countries that previously benefited from EU trade agreements, which then maybe have not been replaced? Give us what scale of uncertainty are we talking about here, Paul?
So we can trade on a global basis, and we will continue to trade on a global basis. We're fortunate in the fact that we've got a technology platform which allows us to be able to introduce sales tax in different regions, introduce different currencies. So we have that flexibility. However, on the macro level, when we're looking at the ability to be able to recruit people, the ability to be able to engage with people, the ability to be able to have an understanding of what we need to do, then there are challenges around that. Everything from how much is the service going to cost next year to how can I get people to work for Greenman Gaming or other technology companies like ours.
Okay, really interesting. Thanks very much for bringing us your perspective. Paul Suliok, Greenman Gaming's CEO. 50 minutes into the trading session, pretty positive here for European equity markets. We'll talk about FX next. Coming up, how will dollar weakness hit other assets? We'll put that question to the Market Live team, and we'll put it to Venram. This is Bloomberg. Welcome back to the European market open. 53 minutes into a trading session that looks like this. Stocks Europe 600 up by 0.1%. Energy stocks clearly doing pretty well on the back of that Brent crude price rise that you see there on your screen, up by more than 2% on oil prices. That does well for big oil or big energy, as they increasingly are. Let's talk to Ven Ram, Bloomberg's Markets Live currency and rate strategist, who's with us now. And today we see the oil price going higher than Ven, 49.66, heading, maybe towards $50 a barrel once again. And that seems to be something that is lifting at least energy stocks in Europe. How do you see the state of risk assets or stock market trade as we head towards into the winter months, really into the winter months here in Europe?
Morning, Anna. I think that stocks have been rising for a long time now, and I think that we are into the final push of that melt up, if you ask me. And the latest increase in crude prices is bound to fuel those energy stocks that you mentioned. And I think that we are likely to see some more upside in stocks as we go into the winter, especially with global rates being so unequally low. I think that there is considerable upside to stocks from here. Anna?
Yeah, rates are low. You've written an interesting macro view piece talking about relative rates, though. So bonds being expensive, but they still might outdo treasuries. What's your argument?
That's right, Anna. Even though bonds and treasuries are overvalued at current levels, it is less so of treasuries than of bonds. If you look at where EUR forward rates and euro area inflation forward swaps are, there isn't much of a bearish case to be made for bonds, and it's useful to keep in mind.
Okay, ladies and gentlemen, I'm placing an order to buy Swissy. Price I'm looking for 0.89065. Okay, order placed, buy at 0.965. That's right here. Okay, let's wait and see. We'll be lucky enough to purchase at this price.
Well, I think that, this is bound to be basically supportive of emerging market assets in general and commodities. Within the emerging market space, bonds and currencies of some of the less idiosyncratic markets such as South Korea, Taiwan, the Philippines, they are bound to benefit from a weaker dollar. The other big gainers are likely to be the commodity currencies such as the Australian and New Zealand dollars, and not forgetting the Norwegian krone. And of course, a weaker dollar is also supportive of gold. Anna?
Okay. Yeah, good to speak to you this morning. Have a great weekend, Ven, when we get there. Ven Ram, Bloomberg's Markets Live currency and rate strategist. No time to ask him about the pound, but it is retreating just a little. 134.18 is where we trade the pound down now, 0.25% as we wait and wait and wait for further Brexit news flow. That's it for the European market open. Stay with Bloomberg TV. Surveillance is up next. This is Bloomberg.
Breakthrough or breakdown? Brexit talks hit a last-minute roadblock as the UK warns over fresh demands, but EU officials deny it. Sterling hits its highest since 2018. Late to the game, the S&P slips late in the session on a report of supply chain obstacles for Pfizer's virus vaccine, even though the company made the statement in early November. Well, virus deaths hit a record in the US and Italy. And finding a compromise, OPEC Plus agrees to slowly add more oil next year after days of tense talks. Saudi Arabia's energy minister calls the process excruciating. Well, good morning, everyone, and happy Friday. Yeah, we've made it to Friday. It's been quite a week. I'm Francine Lacqua here in London. Let's check the markets. Now, the market is firmly focused on three things. Brexit, it's focused on oil because of OPEC, and it's firmly focused on U.S. stimulus in the U.S., whether it will be enough and where exactly it will be funneled through. Now, stocks are holding gains. We're also getting some key data, of course, out of the U.S. It's the U.S. labor market. It will give us an indication of where the economy needs support or not, and oil extending gains from a 9-month high after this OPEC Plus deal. I'm looking at dollar. It's headed for its biggest weekly decline in 5. Treasuries pretty much nudging higher. And then we did have a bit of volatility when it came to pound just because of this backwards and forwards with Brexit. Do we have a deal? Do we not have a deal? Have they walked out? I have to say, it's been pretty unclear so far. So we talk about these last-minute hits. The British saying that it's because of EU demands at last minute, but certainly at the moment, it seems like it could be up in the air. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Good morning, Francine. Hungary's Prime Minister says he won't end his block on the EU budget and virus rescue package unless Brussels drops its tie to upholding democratic values. Viktor Orban reiterated an agreement between his nation and Poland to hold up the budget. The comments dent the prospects of a deal at the EU summit next week. Now, Anthony Fauci, the U.S. government's top infectious disease specialist, has rowed back on his earlier criticism of the UK's rapid approval of the COVID vaccine. He said he didn't mean to imply any sloppiness after describing the UK process as, quote, really rushed. Meanwhile, President-elect Joe Biden says he will ask all Americans to wear a mask to prevent virus spread during the first 100 days of his administration. Now, the OPEC Plus group of nations has agreed to ease planned cuts in oil output next year, pumping an extra 500,000 barrels a day from January. The deal comes after almost a week of fraught negotiations that exposed a rift at the heart of the cartel. Producers also decided ministers will hold monthly consultations to decide on the next steps, a much shorter time frame than usual. And Denmark, meanwhile, is to stop offering new oil exploration licenses in the North Sea as part of a goal to become fossil fuel-free. The country, the European Union's biggest crude producer, says all gas and oil output will end by 2050. Denmark's energy ministry says the decision will cost about 13 billion kroner. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Look at us. We're ladies in red. I hope it's not an omen for the markets. Now, Brexit trade talks were said to be on the verge of a breakdown, but have since hit a snag. British officials say the European Union had suddenly turned up with a new set of demands. Now, they didn't say what the demands were, and EU officials have actually denied it. Now, for more, our Brexit editor, Ed Evans, joins us. Ed, frankly, it was a bizarre turn of events. So are there new demands? Are there not new demands? I know your team is trying to work to try and understand exactly what went down. But is this political posturing? Is this a negotiating tactic? Or is there a bigger risk that we don't get a deal?
Well, the risk that we don't get a deal is always there. Is this negotiating tactics? It's perfectly common at these late-stage negotiations for either side to make wildly different predictions about the likely outcome. That's all about putting pressure on the other side, and that's what appears to be happening here. What we saw this week, earlier in the week, was France coming out and warning Michel Barnier, the EU's chief negotiator, that it could potentially veto a deal if it ran against France's national interest. Now, this is a reminder that Barnier has to sell any deal that he agrees as the negotiator to the EU's 27 member states. Don't forget, they've all got to approve this unanimously. Now, the British have said that that meant the Barnier then came back to the negotiations and made a whole load of demands. They won't say what they were, and of course the EU has denied them. What this suggests, and if you talk to officials on both sides, they both say a breakthrough is possible in the next few days, and that time is certainly running out. I think what this is setting us up for is a call between Boris Johnson and Ursula von der Leyen, the European Commission President, either today or tomorrow. And it's that call that may be the moment that they get that breakthrough, that they say, okay, we can get a deal on fish and everything else, or there's always the outside chance that this is the moment where it breaks down. I mean, we are at, as Shana Sharma, the UK Business Secretary, was saying this morning, we're at a really critical phase in these negotiations now.
Ed, if we don't get a deal by Sunday, could we get a deal next week? When you say, in the next couple of days, is there a self-imposed deadline at some point?
Well, Brexit deadlines always move, so treat this with a pinch of salt. There are some deadlines next week. Don't forget, the internal market bill is going to come back to the Commons on Monday. That, of course, contains the very controversial parts of the bill that will give the British government essentially power to override parts of the withdrawal agreement. That's the original Brexit treaty. That's highly controversial in Europe. I think both sides wanted to get a deal at least agreed in principle before that came back. There's also an EU summit of leaders later in the week. Don't forget, they've got a huge argument going on over their stimulus package, Poland and Hungary, etc. And they don't want a distraction of Brexit going on while that is going on. So I think there is pressure to get it done now. Don't forget, they have to get it done before the end of the year, which is when the Brexit transition period expires, because this deal has to be ratified. That is a process that's relatively straightforward in the UK as parliamentary vote. In Europe, it will take longer. EU leaders have got to approve it, as has the European Parliament. And that does take a little time, and with it, there comes a little risk.
Ed, thank you so much. Ed Evans there, of course, who's in charge of our Brexit coverage. Now, joining us this morning to talk Brexit, talk about the EU and everything in between, which is fisheries, Holger Schmieding, Chief Economist at Berenberg. Holger, great to have you on the program. I mean, I always ask you the same question, which is, are we going to get a deal? But forget that 1 second. Even if we get a deal, it looks like it will be a skinny deal. Financial services aren't in there. Do markets care that much?
Well, markets care mostly whether there will be a deal or not. The rest is to some extent detail. We would like to get rid of the uncertainty. And I think markets have anyway, over the last, say, half year, moved towards appreciating that it probably will be some sort of skinny deal. It will hopefully cover trade in goods almost completely tariff-free, quota-free, but in services, the deal will leave huge gaps, which means for the UK a longer-term economic disadvantage.
Holger, what does it mean for how you're expecting UK assets and the UK economy to actually perform? So if we get a deal, what kind of economy will we see? Is it austerity? Are we going to see tax cuts, or is it tax hikes? How will this government actually shape what we'll see in 18 months from now?
Well, these are very different things. First of all, by the end of this year, one way or the other, we will probably know whether there is a deal or not. So the uncertainty, which as such is negative for the UK economy and a little negative for Europe, will be over one way or the other by the end of the year. Second, there is still a significant likelihood, say 75% plus, that there will be a deal, even if it's a skinny deal. That would also, relative to the current situation of uncertainty, be a modest positive. Now, as to the UK fiscal situation, the UK, of course, does shoot itself in the foot with Brexit. It has done so ever since the referendum. As you can see, that the UK economy has underperformed continental Europe and its own trend as a result of the Brexit referendum. Due to Brexit, the UK will have lower trend growth, which means it will be more difficult in the future to balance the budget. So in a way, Brexit will see to it that in the end, there may have to be tax hikes in the UK, hopefully not early. If there is a deal, then the Brexit damage would be a bit more contained for the UK than in the absence of a deal. So with a deal, even if it's a skinny deal, the UK could reduce the need for tax hikes sometime in the future.
But Holger, at the same time, and you talk about a lot of the negatives for the UK, I guess the positive is that they're completely in charge of fiscal and monetary policy. How much more
well they've been completely in charge of that all the time.
Will we see? Right, but this means that, you know, compared to the others, they'll have a huge advantage. Will the Bank of England have to go into negative rates?
Well, first of all, again, the UK has been fully in charge of its fiscal and monetary policy always. It's been constrained by the exchange rate, so not by the EU or the euro. I don't think that the Bank of England would want to go to negative rates. The UK would probably be able to use other tools in monetary policy if they need to stimulate the economy more than that. And ultimately, indeed, rates are very low across the Western world. Monetary support is great, but what really matters is, first of all, the fiscal response, and secondly, then getting your long-term economic policy right so that your country is a good place to invest, which is where Brexit comes in. Monetary policy is already so supportive, further tweaks to monetary policy would only make a modest difference.
Yeah, and of course, Holger, it wasn't because of Brexit, but, you know, relatively to other parts of the world, they're in charge, of course, which was my question. Holger Schmieding from Berenberg stays with us. We'll talk a lot more about the recovery fund, Poland and Hungary next. Coming up on Bloomberg Surveillance, we speak to the former ECB board member, Benoît Cœuré. That conversation, 10:30 a.m. London time, and this is Bloomberg.
We open position on Swiss franc at 0.89065. That's a long position. So everybody who follow our trades with this strategy, you can purchase at this level. Okay.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, standing defiant, Hungary's Prime Minister Viktor Orban says he won't end his block on the EU's recovery fund unless Brussels gives up on trying spending to upholding democratic values. Now, the unrelenting stance is denting hopes for a deal at next week's summit. Well, for more on this, we're joined by our reporter on the ground, Maria Tadeo. Maria, first of all, good morning. Is Orban now doubling down, or could this be a bluff?
Well, Francine, he's definitely doubled down on the idea that he does not like what he sees right now as a compromise, that he wants to further water down the wording around rule of law here. But you can also see that Orban is really feeling the pressure now from the rest of the EU 25 countries that are clearly now saying and signal they could ditch Poland and Hungary if that's what it takes to go for a 25-member state solution, a coalition of the willing to make sure that this recovery fund is ready for 2021. I would also say Orban perhaps also feeling feeling that pressure on that front, gave a very subtle warning to the Polish, saying that the two countries have agreed on a joint position, and he is expecting the Poles will stick to their word on that front. I would say there's a lot of pressure on Viktor Orban to water down some of his own demands going into that summit next week, which, by the way, Francine, will be done here in person in Brussels for 2 days, potentially perhaps even entering into a Saturday session. That's a lot the European diplomats have to get over next week.
Thank you so much, Maria Tadeo there in Brussels. I have to say, I saw a really funny tweet by someone at BlackRock who used to be in politics, of course, Rupert Harrison, saying, Holger, and we're back with Holger Schmieding from Berenberg, and Holger, what he tweets is like, look, it feels very Christmassy to actually have a fight between the UK and France, and it probably feels also very Christmassy to have a never-ending summit in person in Brussels. When you look, Holger, at all the fight about the recovery fund, is this a bluff? Or is this not a bluff? And does it mean that Holland and Hungary and Poland will be left behind? I've just mashed it up and calling them Holland.
Bluff is probably not the right word. I think Hungary is pretty serious about it. The thing is that we don't really need the Hungarians for it. We have at the EU ways to go around the Hungarian or Polish veto. So they are serious about it, especially the Hungarians, but if they remain at their current positions, the EU will go ahead. This will not derail the EU recovery fund, and Hungary is playing at risk of losing a high-stakes game.
What can the EU do without them? So, explain why high stakes, Holger. What would happen?
The EU can have things where not all member countries have to agree. Remember, the European Central Bank, for instance, the euro, is something which is not shared by all 27 EU members. We have other things, Schengen, which is not a travel-free area for the entire EU. So there are arrangements within the EU treaties which would allow for subgroups of countries to go ahead so that the veto of an individual country would not block it. There are various ways to do that, and the EU is exploring these ways at the moment to make sure that the recovery fund will happen. The problem then for Hungary is if the EU goes around the Hungarians, that A, they wouldn't get any money, and that's a lot of money for them at stake in there, and B, that in the domestic political debate in Hungary, it may not go down well, that because the Hungarians want to have political control over their judiciary, they are actually forfeiting money and moving a bit away from the European mainstream. The Hungarians often are the ones who fear that the core Europe around Germany and France, would be the building block for a tighter European Union. And they would actually add to these fears of being left out if, with the veto, they now force the EU in the biggest fiscal project of the EU ever to go ahead without Hungary.
So what you're telling me, Holger, is that basically Hungary would not be a viable member of the EU if they continue vetoing and if the EU go ahead without them.
Well, they are a viable member of the EU, but they would be left out of, say, the most juicy bit of the EU at the moment, which is this fund. Again, we have in the EU various degrees of integration. There are some members who are not part of the euro. They don't have to. It's their choice. And if Hungary chooses to be outside the fiscal integration, they could, like some countries have chosen to be outside the monetary integration, they could do so, but the Hungarians would lose a lot of money and a lot of reputation by doing so.
I think, Holger, behind you is a beautiful map of parts of Germany, which is, where you're talking to us from. And I think there's Berlin, and I can even see some of the River Spree behind you, if my eyes don't fail me. I know you've moved to Berlin. Overall, Brexit or no Brexit, deal or no deal, at this point, will London suffer because people have moved out to other financial centers?
Yes, London will not suffer very much because of people moving out to other financial centers. That is a modest point, but overall the UK and its capital, London, are already suffering by having less trend growth than before the referendum, by lagging behind the European continent on many counts. Before the referendum, the UK was often ahead of the European continent. Now they lag behind in terms of business investment, in terms of trend growth, probably relative to a few countries on the continent. It is not one big price to be paid at one time, but year by year by year, the UK is losing a few opportunities, which it would have had if it had decided to stay in the EU. It's a free choice, but it comes at a cost.
Holger, thank you so much, as always, for a fun conversation. Holger Schmieding, their chief economist at Berenberg. Now, coming up, as the U.S. grapples with record coronavirus cases, President-elect Biden says he'll ask all Americans to wear a mask for 100 days. More on that next, and this is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now to vaccine concerns, and the S&P 500 slipped amid a report that Pfizer had scaled back its COVID-19 vaccine production targets earlier this year after running into difficulties securing all the materials it needed. Now, the group has already cut its production goal to 50 million doses in November. A spokesperson for the company released a statement saying the scale up of the raw material supply chain took longer than expected. Let's get more with our Sam Fazeli, our Bloomberg Intelligence senior pharmaceutical analyst, who's been wise when it comes to all matters COVID. Sam, thank you for joining us. What does this mean? That it's going to be more difficult for everyone to get hold of these raw materials, or could it be a specific problem for Pfizer?
Good morning, Francine. So obviously, the raw materials that are used, we don't know exactly which ones they are, but whatever they are, they're likely to be the similar ones that are used by Moderna. But the difference here is that Moderna never really promised a specific dose number. They have always said something like 500 million to 1 billion doses in 2022. 2021. And just very recently, there were a question on that. Why can't you commit? And they specifically said, literally used the words raw materials. We don't know how all this is going to pan out, so we just have to be realistic about it. What it does mean is that we need to make sure that other vaccines that don't necessarily have the same raw materials or use less of them make it through. Well, obviously that needs clinical data.
Anthony Fauci, Sam, has also slammed the UK's drug regulator, I think intimating that it rushed to clear the vaccine. That, I guess, what does that do? Does it mean that they went too fast, or does it just hinder public confidence in regulators?
Yeah, but he did walk that back a little bit after another interview with the BBC. I don't know what level of knowledge Dr. Fauci, for whom I have an enormous amount of respect, has of the MHRA process. I think what he then said in his latest remarks was that he didn't mean that they did anything wrong, but that the US has a different process. But we know that already. The US asks for every single data point, a raw data point, to come through, and they analyze it themselves. European and US and UK regulators have not traditionally done that. So it's faster.
All right. Yeah. Okay, Sam, thank you so much. That really clears things up, and we'll talk to Sam also a little bit later to talk more about these vaccines and the safety of them. Sam Fazeli of Bloomberg Intelligence. Now, European energy stocks are leading the charge this morning as OPEC Plus finds its way to a compromise on oil cuts. Up next, more market commentary. This is Bloomberg.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Okay, guys, I'm placing a stop on profit for Swissy at 0.908985. Okay, so you need to place your stop on profit at this level.
Or not, whether he's missed it or not. So something that we're keeping an eye on is certainly Brexit negotiations. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Good morning, Francine, and I'm going to start with Brexit. So Brexit trade talks said to be on the verge of a breakthrough have hit a last-minute bump. The British government said the prospects of an imminent deal had been receded, blaming the European Union for suddenly turning up with a new set of demands. Senior figures close to the European side questioned whether the remarks were intended to pile last-minute pressure on the talks. Now, Hungary's Prime Minister says he won't end his block on the EU budget and virus rescue package unless Brussels drops its tie to upholding democratic values. Viktor Orban reiterated an agreement between his nation and Poland to hold up the budget. The comments dent the prospects of a deal at the EU summit next week. The UK granted 5 passports a minute to Hong Kong residents during the month of October. According to data provided by the UK Passport Office, more than 216,000 Hong Kongers received British national overseas passports during the first 10 months of the year. That was the highest annual figure stretching back to the 1997 handover. Anthony Fauci, the US government's top infectious disease specialist, has rowed back on earlier criticism of the UK's rapid approval of the COVID vaccine. He said he didn't need to imply any sloppiness after describing the UK...
Okay, a closed position on Swissy at 0.89085.
A day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. I have to say, all the conversations in every cab in London is about whether you'd get the vaccine or not and what would it take for you to get it and when available it is. Now let's go back to the markets. And November was one of the best months ever for equities as vaccine boosted equities. So what does the rest of the year and 2021 hold? Well, joining us now is Toby Nangle, Global Head of Asset Allocation at Columbia Threadneedle. Toby, thank you so much. It's been a long week, so apologies for that, but happy Friday. When you look at equities and the bull run that we've seen and actually the records that we've had, is all the good news now priced in?
It's a $1 trillion question there. I mean, valuations are certainly quite high when we look at them in absolute terms. But when we look at them compared to other markets, when we think about the rate environment out there, and we think about the greater level of certainty that's coming through with vaccine being rolled out and the kind of economic rebound that we envisage, and actually we find some quite good pockets of value around the market.
Where do you see that value, Toby? And is this on the presumption that we get a vaccine and that it's rolled out safely and that a critical mass will take it?
Yeah, so I mean, we, like probably most people, had a vaccine in our forecast for coming through in 2021, and the real big positive surprise has been the high efficacy of a couple of vaccines come through. To be honest, I'm not going to get sort of hung up on the timing of the rollout, whether it's 1 month later, 1 month earlier, but there is some understanding that there's a light at the end of a tunnel. And as such, we can see some cyclicality perform a little bit better. So what we've been doing is we've been increasing our allocations to the Japanese market, where we see some really high quality cyclicality play through with some not outlandish valuations. And we've also been increasing our exposure to Asia ex-Japan in the wake of President Biden's, President Biden-elect victory.
Toby, is there, if you look at this rotation, what do you do with, I know you look at equities, but what do you actually do with bonds? And what could, spur that base case that you're talking about?
It's a really important question, that one, because a lot of the view that we've got is predicated on the idea that bond markets do remain in their box, really. We've got, since President Biden-elect's victory has been sort of well known and the vaccines come through, there have been, day to day quite a lot of volatility in government bonds, but actually the levels haven't changed a huge amount, and we're not expecting them to change a huge amount over the next year. That is to say, we think they're going to be pretty much contained. If let's say the 30-year Treasury up to maybe 2%. Now, there's a lot of risk around that because the fiscal box is a lot of politicians seeking to open that fiscal box and provide a faster pace of nominal growth, potentially more reflationary pressures coming through. But right now, the COVID's put such a big hole in the economy. The output gap is so large that we think that there's a good reason to keep yields pinned down. And also, you've got to remember the amount of debt that's been put on the corporate side, the household side, and the government side, that there's greater sensitivity to yield rises that could slow the economy from here. And so we see yields pretty much remaining not too far from where they are. That said, we don't see a lot of value in government bonds. And indeed, the role in an asset allocation portfolio of government bonds is going to be much less. It's going to be much less useful, we think, going forward.
Toby, we're just getting some news out of Michael Saunders of the Bank of England saying a rate cut plus QE may be the best stimulus approach, and he's also saying that negative rates review is ongoing. What do you do with UK assets at this juncture in time? We don't know whether we have a deal. Even if we get a deal, it's a skinny deal, basically ignoring large parts of the economy. Yeah, well, I mean, Brexit's been pretty hard to call on a day-by-day basis as new details emerge. I mean, you've seen a fair amount of optimism come through in sterling to the point whereby when I speak to people across the foreign exchange markets, they tell me there is 100% certainty of a skinny deal priced in already. But as the question frames it, there's not a huge amount of economic difference between a skinny deal and no deal. Obviously, it would be much less disruptive to have a skinny deal, and it would set the scene for a more productive relationship with our European partners in a skinny deal. So my base case is a skinny deal, and that could allow UK equities to re-rate a little bit more. They're still quite depressed. We've seen a bit of re-rating, but not a huge amount since that value rotation began at the beginning of October. And I think a lot of the UK outperformance that you've seen since the end of October has actually been more about the high weightings in energy and financials that have performed well across the globe. So what do we do from UK assets from here? Well, those aspects that we think will perform well, that is to say the cyclicality aspects, we're choosing more to get that in Japan than in the UK. But I can certainly see the UK market doing reasonably well when a skinny deal comes through, as some of those positive trends that would help the UK market, that is, say, cyclicality, and perhaps the last bit of Brexit premia attached to people who are looking for a no deal, if that starts to fade. But we're choosing to place our bets elsewhere. Yeah. Do you expect dollar weakness from now, and how would dollar weakness hit other assets?
So over the medium term, we are looking for some dollar weakness. The euro strength has been a little bit of a headwind, but it hasn't been profound so far. But having some dollar weakness, we can see can provide a bit of relief to emerging markets, a bit of relief to commodities. That sort of weaker dollar environment could be actually quite constructive for emerging markets in particular, and we're seeking to kind of take exposure to that primarily through greater exposure to Asia ex-Japan.
Great. Thank you so much for joining us today. Toby Nangle there, Global Head of Asset Allocation at Columbia Threadneedle. Now coming up, oil optimism. Crude gets a boost after OPEC Plus members clinch a crucial agreement on easing output cuts. We have the story next, and this is Bloomberg. Surveillance. I'm Francine Lapre here in London. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Pfizer scaled back its vaccine production targets earlier this year after it ran into difficulties securing all the materials it needed. It had originally promised up to 100 million doses this year, but now says the target is 50 million. A spokesperson for the company released a statement saying the scale-up of the raw material supply chain did take longer than expected. Morgan Stanley is handing out a special one-time bonus for lower-paid workers as the firm heads towards a record year. The bank will give around half of its 30,000 global employees a one-off payment of $1,000. The benefit adds to Morgan Stanley's promise that it will not cut its workforce this year, despite the fallout from COVID-19. And Delta Airlines is warning cash losses for the current quarter could be deeper than expected as the coronavirus continues to undermine air travel. Delta now expects to burn up to $14 million a day, up from an earlier forecast of $12 million. The airline says revenue will be 30% less than that for the same period last year, in line with earlier estimates. And that's your Bloomberg Business Flash. Francine.
Thank you, Leanne. Now, oil extends gains after OPEC Plus reached an agreement to gradually ease production cuts. The deal comes after a day of tense negotiations. The group will start adding 500,000 barrels a day of crude to the market in January. Well, the Saudi Energy Minister, Prince Abdulaziz bin Salman, said output would be kept under review at monthly consultations between members from January.
We could tweak upward, we could tweak downward, and we could stay put. And it is all about addressing uncertainty. If you have an uncertain situation, you need to be attentive. That's why central bankers, they meet every month. That's why tweaking happens at all levels. This is a grand arrangement. This is a grand commitment.
I mean, it's great to keep all options on the table. Joining us now is Will Kennedy from our Energy and Commodities team. Will, great to have you on Bloomberg Surveillance. If OPEC is increasing production, why has the market actually reacted so positively?
Because they feared it might be worse for two reasons. One, under the agreement going into this meeting, they were meant to put 1.9 million barrels a day into the market in January, and that hasn't happened. We've got just over a quarter of that oil, so that's a relief to the market. And secondly, there was a lot of attention on disagreements with OPEC. It wasn't a particularly easy meeting. There was clearly some tension between the UAE and Saudi Arabia. You know, we saw a 2-day delay in the final meeting while they resolved their differences. And the market is relieved that the meeting was successful and everyone was able to come to consensus.
So what does the outlook actually look like, Will, for next year, now that OPEC has agreed to monthly meetings?
Well, monthly meetings are going to be interesting. We all know how tense and stressful OPEC policy making can be, and they're going to do it every month, which will make some in the market nervous because it gives room for things to flow up on a more regular basis. On the other hand, I think it gives them flexibility to manage what is going to be a recovering oil market, but a tricky oil market this year. I mean, at the moment, next year rather, at the moment they're torn between a very strong recovery in Asia and a lot of pandemic uncertainty in Europe and the US. So we've got two very different oil markets there. And they don't know how quickly the vaccine rollout is going to happen and how quickly demand will recover next year. And they need to maintain that flexibility. So small increments and regular meetings might make sense from that point of view.
Well, when you look at some of the chatter, so it really showed us how divided some of the cartel is after these 5 very long days of negotiations and difficult days for negotiations. We were talking about not a story for now, but longer term, certain countries dropping out of OPEC. Is it still the case? Is this going to, is this actually going to be looked back on as a decisive week on whether the group can stick together or not?
I'm not sure it's a decisive meeting. I think it shows tensions about how to manage the oil market coming out of the pandemic and what the different countries want to do as we recover. I mean, clearly the UAE feels like its quota constrains it. Countries like Nigeria and Iraq need more money. But ultimately, OPEC tends to find a way. People have worried about the future of OPEC for a very long time now, and it tends to find a way. It may blow up again, and I think there will be tensions again. But I think this meeting is not decisive in the cartel's future, but it shows that they can still hang together and find a compromise.
Thank you so much. Great work, of course, to you and your team. Will Kennedy there, who oversees all of our OPEC coverage. Now, with the election of Joe Biden in the United States, green energy has been pushed firmly back onto the global agenda. The Shell chief executive, Ben van Beurden, says he was hopeful that the new administration would bring fresh impetus to the green transition.
In the last 5+ years, the world has been traveling in an opposite direction. Nationalism, deglobalization, multilateralism, all these things have changed for the worse, for that matter. So I'm quite hopeful that with the new administration coming in, there will actually be a change of sentiment and hopefully also effectively a change of direction. Because if it doesn't happen, if we can't find a way to make multilateralism, globalization, cooperation, everything else work, I don't think we are going to succeed in the energy transition.
And do you think Joe Biden is the right solution to that?
Well, I'm not a U.S. citizen, so I didn't vote in the election, so let me not comment on the suitability of candidates. And it's early to say at this point on what exactly the policies will be of a Biden-Harris administration. But I think rejoining Paris is a pretty good start, I would suggest. And some of the ideas that sit behind the Green Deal are not bad either, but in the end, it's all the practicalities that will matter. And we will have to see how they play out. But the whole fundamental idea of more collaboration, more progressive policies, working hard on emissions, they are the same things that we stand for as a company.
Is there something that you and your team are preparing for his administration to do or hoping they would do, like you pretty much were front running here in the UK about the ban on petrol and diesel cars? Is there something you're planning for with a Biden-Harris administration?
Not practically on the ground, Anne-Marie, but obviously we routinely have good contacts with whatever administration happens to be in Washington. We have what I believe is world-class thought leadership on the energy system and also on policy measures that can be taken. We have a very good idea on how the energy system in the US works and how it could evolve. And we stand ready to share our thinking and our ideas with that administration the same way as we do in Europe.
That was the Shell chief executive, Ben van Beurden, there speaking to our Anne-Marie Hordern. Coming up, where are the women? We've seen a number of high-profile personnel moves in European banking, but they're all men. So we'll discuss the lack of women in finance. That's coming up next, and this is Bloomberg.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's turn to banking, and we've seen a number of high-profile personnel moves in Europe. Antonio Horta-Osorio is leaving Lloyd's Banking Group to be chairman of Credit Suisse. Meanwhile, taking his place is Charlie Nunn, who comes from HSBC. UniCredit is also looking for Jean-Pierre Mustier's replacement as chief executive, while the three candidates being considered are all men. It begs the question, where are the women in finance? Well, for more, joining us is Sri Vidya Bhattacharya, our executive editor for EMEA. Sri, I know you've also written a wonderful piece about women in finance for Business Week that was widely read, and I urge everyone who hasn't read it to go and look at it on our terminal or on the website. But Sri, what is the new crop of leaders now looking like in European banking?
Well, this is a once-in-a-generation change at Europe's largest financial institutions. And disappointingly, the cast of new characters looks very much like the old guard. So we're seeing a lot of men who are taking over the reins of leadership, and a bit of a lost opportunity to elevate women executives. And the lone outlier here has been, in Europe at least, NatWest, who last year named Alison Rose as CEO. But if you look at all of the leaders across Europe's banks and other financial institutions, they're mostly male.
I guess, Sri, the concern or the question begs is, are there not enough women in, the positions like second in command? To become chief executive, usually you have to be groomed or have experience across the board. So is it that, there are women in that second chain of command that are being overlooked, or there are not enough women in that leadership position?
That's exactly right, and you've isolated really what is a very important issue, which is the bench and making that bench robust. And it takes years of planning. You cannot do that, and you cannot accelerate that process. And what this really highlights is that banks have been they've been behind the curve in planning for an eventual changing of the guard. And when you look around, the people, the new generation of leaders, women are conspicuously absent from that chain. And it's heartening to see, for instance, today, UBS did announce a shakeup. There are senior women executives at UBS who are coming up the chain. Similarly, with Deutsche Bank, you are beginning to see women ascend through the ranks of executives. However, this process does take decades sometimes, and banks have just started planning for this very late.
Sri, thank you so much for all of that. Sri Vidya Bhattacharya, our executive editor for EMEA. Now, this is what the markets are looking at. So, of course, it's a big data day for the jobless figures in the U.S. So look out for any movement on that. The other big story, of course, is OPEC with oil. There's also a couple of news on the U.K. Now, Brexit negotiations, we're trying to figure out exactly how they're going. We just have another headline coming in from Reuters saying a U.K. trade deal is expected by the end of the weekend. Now, from our own sources, that's what we had understood, but then a spanner in the works happened last night, so we're just checking and calling, of course, ringing the phones to make sure we have all the facts straight for you. Pound pretty much unchanged, I guess, at the moment, or at least I'm looking at euro sterling 0.9030. Bloomberg Surveillance continues in the next hour. Tom Keene joins me out of New York. Of course, we'll be talking to a number of market participants. We'll also talk cryptocurrency cryptocurrencies with Benoît Cœuré, former ECB, now at the BIS. I'm really, really looking forward to speaking to Monsieur Cœuré about payments, about cryptocurrencies, and in general, what role they'll play in the future for central banks. This is Bloomberg.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
Breakthrough or breakdown? Well, Brexit talks hit a last-minute roadblock as the UK warns over fresh demands, but EU officials deny it. Sterling hits its highest since 2018. Late to the game, the S&P slips late in the session on a report of supply chain obstacles for Pfizer's virus vaccine. Even though the company made the statement in early November, virus deaths hit a record in the US and Italy. And finding a compromise, OPEC Plus agrees to slowly add more oil next year after days of tense talks. Saudi Arabia's energy minister called the process excruciating. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua in London, Tom Keene in New York. Tom, I have to say, we look at the data in the U.S. That's probably could be market moving, but we really tried to figure out whether we'll have a deal by the end of the weekend on Brexit. I mean, it's amazing. The headlines and people are making calls. Did Michel Barnier go back to Brussels? Did he miss his Eurostar? Did he not? It's quite exciting. There's like a whole subplot on the trains.
I don't think it's a small issue. The Telegraph has a great chart, Francine, of the difference between 12 miles of fisheries and 200 miles of fisheries. And I can understand the delicacies, I believe, as the Prime Minister tries to help Mr. Macron by phasing in those fishing rights. We'll be speaking, I know, to our fisheries expert, Therese Raphael, here.
Yeah, and I think the underlying question, away from how many fish who can fish at any time, is really whether there's a political will to find something and sign something, or whether they just want to postpone it, which has happened before in Brexit. Now let's get straight to the Bloomberg First Word News. Here's Ritika Gupta. Hi, Ritika.
Morning, Francine. Tom, the Justice Department is in talks about resolving charges against the CEO of Huawei Technologies. It's a long-running dispute that's fueled a clash between the US and China. Canada arrested Meng Wanzhou 2 years ago on a US request, and she has been confined to the city of Vancouver ever since. Dow Jones reports there are talks of a deferred prosecution agreement on violating sanctions against Iran that would allow Meng to return to China. Joe Biden says he'll ask all Americans to wear a mask for the first 100 days of his administration. The president-elect also told CNN he'll issue a standing order requiring face coverings in federal buildings and interstate transportation. Biden says he thinks all that will lead to a significant drop in coronavirus cases. On Capitol Hill, the chances are now higher for a deal on a stimulus package by the end of the year. A bipartisan plan endorsed by Democratic leaders as a basis for negotiation is now getting more interest from Republicans. The proposal calls for spending $908 billion. That's less than what Democrats are calling for, but they say it's a starting point. And OPEC and its allies have finally found a compromise on output cuts. After 5 days of difficult talks, members agreed to gently ease into reducing production next year. Saudi Arabia's energy minister called the process tiring and excruciating. Global News 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom?
Ritika, thanks so much. Equities, bonds, currencies, commodities. Let's get right to it here. Really interesting market here. Yeah, there's all the news, but you know what? The markets scream higher. Futures up 10, Dow futures up 122, lofting Dow over 30,000. NASDAQ 100 to me is the big story. 12,500 now on NASDAQ. Futures, the VIX really doesn't move in like you'd expect. 21.06. Dare I say a 19 handle on the VIX sometime today. We shall see. In the bond space, as they say, yields a little bit higher, correlated out nicely with that equity move. Dollar weaker, renminbi out to new strength as well. Oil, I'm on the $50 a barrel watch. Francine?
Yeah, I'm on the $50 barrel watch, too. A report, of course, later today is expected to show that U.S. employment gains probably slowed only modestly in November, despite a record surge in virus cases. Watch out if there's a surprise. But overall, European stocks, U.S. futures are, edging higher. I wouldn't, write home about it, but they're gaining some 0.3%. Investors mulling the recent strength in global equities whilst awaiting data. You're right, oil extending gains after this OPEC Plus deal. Yeah. And then look at pound. It's always good to look at pound because we're trying to understand this political posturing. Do we have a deal? Do we not have a deal? Will we get it this weekend? The $1 million question. So prospects of an imminent Brexit deal, Tom, receding as British officials blame the European Union for suddenly turning up with a new set of demands. Negotiations descending into disagreement over French concern and UK red lines, while the French European Affairs Minister, Clément Beaune, telling Europe 1 Radio that if there is a good deal, or if there is a deal which is not a good deal, then we would oppose it. We always said so. We also had some headlines in the last 10 minutes or so, Tom, though, from Reuters saying that we could see that a deal is still on the cards as soon as this weekend. So for more on all of this, let's bring in Bloomberg's Thérèse Raphael. Thérèse, I have to say, when you look at, the posturing, we see Michel Barnier on a Eurostar. He didn't take the Eurostar. He's briefing people like, where are we? Will we just find out once we get a deal, if we get it this weekend, or can we really look at blow by blow to understand what's going on?
Well, I do think this weekend, if it's not a hard deadline, it's pretty close to it. And there are two reasons for that. One is, just on the issue of sort of bandwidth from the EU. They have their big summit at the end of next week. Time is running out. The deal, if it's done, it needs to be legally scrubbed. It needs to be translated into EU members' languages. It then needs to be voted on by Parliament. So time is, we keep saying this, but it is well and truly running out. But the other issue on Monday, we've got the House of Commons is due again to vote on the UK's internal market bill, and that is that extremely controversial piece
piece of legislation because it contains clauses that would breach the withdrawal agreement, the deal that Boris Johnson reached with the EU last year. And the EU has been very clear that if that passes and is implemented, that there would be no deal. So I think there are conflicts on both sides. Whether they want to get a deal done, I think it's pretty clear that both sides do. But for Macron and for Boris Johnson, fish, this tiny part of the economies, has become this incredibly symbolic issue for both, and so they need to each be able to ensure that they can sell whatever they do agree to the publics, and for posterity not be considered to have caved in on this totemic issue.
Therese, do you think we'll get a deal? I know, people are trying to figure out whether this is a sign of brinkmanship. I know it's the most difficult question.
I think my guess is probably as good as yours, Francine. I still think somehow they'll eke something out, but here's what I would say. It's not very different than no deal. In a way, it would be no deal in disguise, because so many of the issues facing business would still have to be sorted out following the deal in the new year. Everything from, really the nitty-gritty of rules of origin to standards and certifications. And I think there's so much still to be worked out. So whether they actually sign something matters for the tone of the relationship going forward. But I think the level of detail that the two sides are going to negotiate is going to carry on way beyond this year, way into next year, and even beyond that. So, maybe the question of deal or no deal is not even as important as we think it is.
Therese, I want to get down to the nitty-gritty, and this is Rules Restaurant, of course, in London, where Francine, you and I will sit at the James Bond table in the back, and we will have fish pie with cream potato topping. It all comes down to fish. Yeah, fish pie. It's what Rules is.
It's a game restaurant. You're missing that.
Yeah, I know. Fish pie, and that's what this is about, is fishing. Mr. Macron wants to protect the fishing people of France. Does the Prime Minister of the United Kingdom have the same challenges? Does he need to check to protect the fishing people of Britain?
Well, it's more complicated in Britain, because what Britain fishes, it doesn't consume. It sells into other markets, and particularly the EU market. And what it consumes in fish, it doesn't fish. So the two sides are very interdependent, and it doesn't serve the fishermen it doesn't serve either the EU and France or the UK to have no deal here. And that's very clear, and both sides know it. But getting a deal on fish that is not considered a sellout is important to Boris Johnson's support within Brexiters, and many would say within the north of the country. But as you know, it's finding the right level of quota is hugely difficult, and the EU demands have been rejected by the UK, and so it looks like they will try to sort of fudge it with phasing in a repatriation of quotas, and it's just not clear yet what level they'll reach.
Therese, let's go to a chart. Folks, we're reintroducing our charts here off the Bloomberg terminal, of course, and this is the Brexit chart, real simple, back to a time of over 140 as well. Does sterling matter to the government's calculation, or are they just essentially ignoring the market and the recent sterling strength?
I mean, I think it's not unimportant, but if you list, all of the concerns the government has, it's probably down there. It's understood that if there's no deal at all, sterling is going to take a hit. That's going to be bad for the UK economy, and so it's a barometer of that. And I think the government's probably got an eye on that. But if it could get a deal and these elements fall into place, then I think the Forex markets will take care of that.
Therese, thank you so much. Therese Raphael there, of course, on Brexit. And Tom, we both know that we don't have game and we don't have fish at Rules, because you and I just have Stilton. It's very festive, and at least that's one thing that can't be touched because it's done in the UK. Folks, no matter if we get a Brexit deal.
To see Francine Lacroix ensconced at Rules on her third black velvet, which is, for those of you that are, of course, know this, it's champagne and Guinness together. It's just a remarkable sight to behold.
I thought I was an Aperol girl, but Tom, I'll go
They don't
with
do
whatever
Aperol
you're
Rules.
having.
I can tell you they do not do Aperol
Especially in 2020.
Rules. Yeah.
Coming up, we'll talk markets with Nouriel Roubini, NY Stern School of Business professor and NourielToday.com host. That's at 5:30 a.m. in New York, 10:30 a.m. in London, and this is Bloomberg.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Tom, we're talking about Brexit with Therese Raphael with a side of Restaurant Reviews of London. Let's get straight to Simon French. He's Panmure Gordon, Chief Economist. Simon, given where we are in the Brexit deal, which we don't know what happens, it's very volatile and it changes almost hourly. Even if we get a deal, what kind of deal is it? Is it enough to give something substantial to the UK?
So I think what you were talking about before the break is absolutely spot on. The difference between a deal at this stage and no deal is relatively limited. We think about 1.5% to 2% of GDP. But, and I think this is crucial, is a lot of what won't be covered in the deal will be the rules of engagement regarding getting services frictions to be minimalised in the coming years, 2021, 2022, and the trust that would be broken down as a result of no deal, given the impact that would have on the Irish economy, Northern French economy, the Dutch, the Belgian economy, means that there is a much bigger accretive problem in terms of cooperation going forward on the services side as a result of no deal compared to a thin trade deal at this stage.
What happens to UK assets, Simon, if we don't get a deal?
So there is a very clear and persistent 20 to 25% discount on UK assets versus their European benchmark. If you benchmark the UK components of the Stock 600 versus the European elements, you can see that discount has all emerged since 2016. If you don't get a deal, then I think that discount widens further, probably the order of maybe 5 to 10%. But it has to be said that considerable frictions are already in the price, and it is perhaps the upside potential that is more focusing minds, and you're just starting to see the domestic UK stocks catch a nervous bid, but clearly that makes them vulnerable should they have called it the wrong way.
Simon, Very simply here, there has to be a give and a take, and my experience is in every fishing rights or natural resources dispute, the calendar is your friend. Do you just assume that these political issues will be extended out 1 year, 2 year, 5 year, 10-year phase-in?
Spot on. So what both sides will agree not to call the coming few years is a transition. That has become a very difficult word, particularly for the UK government. But a almost semi-permanent state of transition, analogous for some of your viewers to the Swiss-EU relationship, where there is a dynamic dialogue, is exactly the relationship that the UK will have to have with the European Union and vice versa. They are too interrelated. They're too material a trade partners. You're absolutely right. A lot of those issues will move into the future. What you are looking as an investor is to avoid a hard stop of trade flows or a break of trust that means that what the UK want to do, which is largely to achieve similar sorts of things on climate change, on industrial policy as the European Union, but just by different means, that there can be a level of trust that means they can deem that equivalent.
From where you sit, can Mr. Macron tell Finland what to do?
Mr. Macron can certainly play to his political gallery. I think what we've seen with Mr. Macron is that he likes invoking the Charles de Gaulle nom. Whether he will follow through, however, and derail either the EU budget process or indeed Brexit, given the pain that would actually, reverse engineer into the French economy, I think it's more bluster than actually a material statement of intent.
Simon, going back to the deal that we could or not see at the weekend, when the French this week said they could veto if it wasn't the right deal, was this just to increase pressure? I mean, I don't think it's actually changed much from what they had said in the past, but how significant to bring it up this week?
Look, I think if you see bilateral discussions, or in this case, bilateral multilateral discussions, what tends to happen is when you focus down on getting very close to the deadline, issues that have been thought of being put to bed are raised. And you're right, this is not a new issue. But also, there is a degree of... excuse the sort of sport parlance that may not be au fait with your American viewers, but rolling the pitch in cricket terms. You're preparing your domestic audience for what is to come. And to be seen to have negotiated hard is an important metric because most of the electorate don't actually scrutinise the underlying detail when it's finally released.
Tom loves a sports analogy. He's Googling cricket as we speak, Simon. What about on the UK side? I mean, we saw 55 Tory MPs voting against the Prime Minister, nothing to do with Brexit because it was on the lockdown. But if he comes back with a deal that isn't seen as favourable, between factions of the Conservatives that are more to the right, would they veto it down?
They might do, but the most important political statement of the last 24 hours was the Leader of the Opposition, Sir Keir Starmer, saying that he is inclined, should a deal come back, to instruct his party's MPs to vote for a deal. Now, clearly, that would mean that Boris Johnson feels he can make more concessions because he would not need all the votes of his own party in order to pass a deal. Now, it might be that Keir Starmer's statement is time inconsistent, but I think on that basis, there is a bit more wriggle room for Boris Johnson that if Keir Starmer was prepared to say, I will vote down a deal, because then Johnson would need all of his own party.
Simon French, thank you so much. Greatly, greatly appreciate it this morning on a very much moving story here into the weekend. He will continue with us today. Coming up later, after the jobs report, Jonathan Farrow in conversation with Mr. Kudlow of the White House, the National Economic Council Director. This is Bloomberg Futures Lift Up 11.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
During this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance. I'm Rishka Gupta with your Bloomberg Business Flash. It turns out that Pfizer scaled back its coronavirus vaccine production targets earlier this year. The drug maker ran into problems getting all the materials it needs to produce the shots on a large scale. Pfizer had hoped to produce 100 million doses by the end of December. Now it estimates it will make half that amount. It's a dramatic change that shows how much the coronavirus and streaming have disrupted Hollywood. Warner Brothers plans to release all its major movies next year in theaters and on HBO Max at the same time. The announcement rocked shares of theater chains. Industry leader AMC plunged 16%. Wall Street is on the verge of a long-sought win to relax anti-money laundering requirements. Congress has tucked the measures away in the upcoming defense spending bill. It could dramatically ease banks' compliance burdens. Amongst other things, the legislation would bar the use of anonymous shell companies to launder money. And that is your latest Bloomberg Business Flash. Francine?
Thank you so much, Ritika. Now, this is what the markets are doing. A lot of the focus will be on that U.S. jobs data. I'm looking forward to see what happens to the markets on the back of it. The other story, of course, is oil. So Tom and I both watching for American oil, WTI, you can see 46.09, whether it touches 50 after OPEC Plus found an agreement. And the third story, Tom, is what's going on with Brexit. Do we have a deal? Do we not have a deal? What we have now is just a lot of confusion, Tom. And you can see sterling 134.37.
Yeah, sterling churning there, and I'd also note on the dollar weaker again today fractionally. Asia DXY goes out to new strength, and renminbi has been really quite something. 6.53 yuan per dollar. Not enough has been said about that. Maybe I'll do a chart on that later here. Futures up 10, Dow futures up 116. The VIX doesn't move yet in early American trading, 21.08 on the VIX, and that's pretty much it. I do want to point out the continued lift in oil, and we are on a watch for global oil at $50 a barrel, which is a long way from the negative pricing of that crisis. I believe that was in March. Maybe that was in April as well. It is Jobs Day in America. We will have important conversation. Lawrence Kudlow will join us from the White House after the jobs report. Before the report, Ellen Zentner of Morgan Stanley will join us, their chief economist, to get a recalibration, not so much on the November report today, but what will the December report look like in 2021? This is Bloomberg. Good morning.
for retirement is confusing. That's one reason why 42% of people age 18 to 29 have no savings, and partially because of things like student loans and other priorities like just being able to pay rent. But if you do have the means to save it all, here are some ways to get started. First, there's the one everyone thinks about, which is your 401k. This is a savings account that lowers your taxable income because you don't have to pay taxes on the money you contribute. The downside is that when you take that money out, you have to pay taxes based on the income bracket you're in at retirement age. But there's one major benefit to your 401k. Employers often offer contribution matching, which means essentially you're getting free money. Another option is the Roth IRA. With this, you pay taxes now on the money you put in. This gives you a savings account you can withdraw money from at retirement without having to pay taxes on the money you take out. You can only put $6,000 a year into a Roth. This is also a great option because with a traditional 401k, you may have to pay a penalty if you have to cash that money out early, but that's not the case with a Roth. Most financial experts suggest a combination of the two if you're able. To save more and worry less, you can set up automatic transfers into a savings account from your regular bank or credit union. Tools like Betterment can also help you set up automatic payments into a Roth IRA so that investing can be simple and mindless.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Bloomberg Surveillance. Good morning, everyone. Tom Keene in New York, Francine Lacroix in London. Jobs Day in America, but just huge news flow and equity markets lift up as well. Simon French with us with Panmure Gordon. Simon, I want to broaden it out from the U.S. Jobs Day to sort of a pandemic global Jobs Day as well. One of the great constraints of this pandemic has been a growing inequality. Define for us the labor or job inequality that is out there.
So the savings ratio has been one of the most focused on charts through this pandemic. Frustrated consumption has been part of the story, seeing almost 25-30% savings ratios across a lot of developed economies. But the inequality of that is very striking. High-income and middle-income households have seen a build up a war chest that is likely to be unleashed in terms of fueling consumer spending in 2021. But those who have lost their jobs, those who have been furloughed, those who are inactive, those are the people who have struggled through this period. And therefore, what we're going to see is not just an unequal impact through the pandemic, but the rebound is going to be very asymmetrical and quite unequal.
Right. Beautifully explained. Simon, you're a great student of this. And to me, the interesting thing is the study of the United Kingdom and the United States on the efficacy of stimulus and income substitution and replacement so far. Do you perceive that in Britain they got it right and they got the money to the people that need it, and to say in the United States they got it wrong and they didn't get the money to the people who need it?
Couple of parts to that story. One, in the UK, largely fiscal policy did its job in terms of protecting around 9 million employed incomes at its height under the furlough scheme, the job protection scheme in the early part of the second quarter. That's still about 5 million people who are on that scheme right now. It's got the cash in the hands of those people who need it, protected their incomes. There is a group, about 3 million of the self-employed, for whom there's been less support and there's been less well targeted. But overall, I'd give it a good 8 out of 10. In the US, I would say it was probably a 9 and 9.5 out of 10 initially over the summer. But of course, what we've all been talking about in the last few months, the lack of a second wave of fiscal stimulus, has downgraded that score. So I think there's been a crossover at the early part of the fourth quarter between performance of fiscal policymakers on your side of the Atlantic and the performance on this side.
Simon, I guess the amount of time that we tried to suspend the economy through lockdowns, and it's unclear once we have a vaccine whether the lockdowns go away, or at least for a couple of months they could come back. But if it's contained to, let's say, 12 months, how much is, the limited scarring, or how limited is the scarring compared to what we could have seen if it had gone on for longer?
Yes, you're absolutely right. So what we know from the history of labour market economics is this hysteresis scarring effect on people's ability to command similar or higher incomes after a period outside the jobs market. We know that's impaired, and the longer that goes on, the more material that scarring is. What we don't know, because of this suspended animation, is the degree to which skills become obsolete, attachment...
I'm placing an order to buy British pound at 134.50. Okay. Order placed to buy British pound at 134.50. Actually, I will move lower to 134.49. Okay, position opened. Position opened at 134.49. Long position for British pound.
That a rate cut with QE is better than QE alone, which, some people are saying, well, it would distort and things like that. Do you think we will see negative rates in the UK, and what would be an optimum time of going negative?
So I don't think we will see negative. Michael Saunders, as you rightly say, is towards the dovish end of the spectrum. But if we do see it, your second part of your question is absolutely spot on. When will it come? And at the virtual Jackson Hole, we heard Bank of England Governor Andrew Bailey talking about actually the time potentially to go negative is as the economy is recovering. And we talked about with Tom about the savings ratio spike. If you're trying to encourage that discretionary saving to come back down and fuel consumption spending, then maybe introducing that shot into the arm of both asset purchases plus negative rates as the recovery takes hold may be the right policy prescription, and therefore paradoxically, as things get better, potentially the likelihood for negative interest rates increases in the UK.
Simon French, thank you so much. Just really, really interesting here. And again, this Brexit story, I really want to emphasize, particularly for those waking up in America, really a movable feast right now. In New York City, with our First Word News, here's Ritika Gupta.
Thanks, Tom. President-elect Joe Biden plans to fight the spread of the coronavirus from day one of his administration. In an interview on CNN, he said he would ask Americans to wear masks for the first 100 days he's in office. Biden has also asked Anthony Fauci to stay on as the government's top infectious diseases expert. President Trump is again threatening to veto a defense spending bill unless Congress also strips social media platforms of a key legal shield. Both parties have agreed on the bill, which authorizes military pay raises, amongst other things. The measure is expected to pass despite the president's veto threats. And the first U.S. state to tell residents to stay home to fight the coronavirus is about to do it again. California Governor Gavin Newsom warns that most of the state could be ordered to shelter at home within days. He says he'll order lockdowns on a regional basis once hospitals run short of intensive care beds. California has the fastest increase in infections since the pandemic began. Brexit negotiations have hit a last-minute bump. Trade talks that were on the verge of a breakthrough descended into a fight between the UK and France. British officials say the European Union turned up with a new set of demands. They aren't saying what the demands are. Global News 24 hours a day on air and a Bloomberg Quick Take powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine?
Ritika, thanks so much. Our interview of the day is with Benoit Corré. He's the BIS Head of Innovation Hub, former ECB Executive Board member. Tom and I will have a robust conversation on the payment system. We'll also talk about cryptocurrencies and the use of these cryptocurrencies for central banks. This is Bloomberg. That is coming up shortly.
particularly, sort of the technology landscape gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
This is Bloomberg Surveillance. I'm Francine Lackman, London. Tom Keynes in New York. Now, Tom, Bitcoin hovering at all-time highs, renewing interest, of course, in cryptocurrencies. The Bank of International Settlements, meanwhile, makes the case for central bank digital currencies. And we're delighted to be joined, Tom and I, by Benoît Cœuré. He's the BIS Head of Innovation Hub and former ECB Executive Board Member. Benoît Cœuré, thank you so much for joining us right here on Bloomberg Surveillance. Now, you put out a report amongst with central banks, which basically sets out the core principles for national digital currencies. Now, that is as some central banks around the world are actually publicly saying they're still evaluating. Are you surprised by the pace of change at which we could see in this space?
First, good morning, and thank you for having me. I was surprised. I've been surprised last year. Yeah, and all throughout the year. 2020 clearly has been the year where research and experimenting on CBDC has taken a leap forward. I'm not surprised anymore, but I've been surprised, and clearly the pandemic has to do about it. Clearly that has been a big push to contactless payments and digital payments generally.
This, of course, is the role of CBDC as a part of the payment system, as opposed to monetary tools. Do you see that possibly changing in the future?
No, I see central banks around the world addressing CBDC primarily as a payment instrument, and that's driven by change around us. Change in and by the way, the system is changing at both ends, right? At the back end, we're seeing blockchain infrastructures, and we're asking ourselves how to bring central bank money to these new infrastructures. And at the front end, we are seeing a lot of new customer-friendly applications and new ways to pay. And here also we have to wonder how we bring central bank money to that end of the market. But it's primarily a payment discussion. It's not primarily a monetary policy discussion. That may change in the future, but I don't see that today.
Benoît, Nouriel Roubini is going to join us here later on Surveillance. He and many, many others really question the underpinnings of Bitcoin over to cyber currencies and what banking's trying to do. How can commercial banks affect this business without the taint of the crime and the scam associated with Bitcoin?
Well, there is room for everyone under the sun, so it's certainly not the central bank's intention to stifle innovation or to kill these markets. There is a lot of scope for innovation in the crypto space. What we want to do is to see it being safe for consumers. And that relates to anti-money laundering, combating the financing of terrorism, and so on and so forth. And so everything is possible, innovation is welcome, but regulation has been very strong and tight. And that's what you've seen happening since over the last years everywhere. And we also want to see how commercial banks can help develop the ecosystem. Banks shouldn't be defensive. They have a lot to gain. This will create new services to customers, and they have to embrace innovation and to use all these new means of payment to provide new services.
I strongly take your point there, and it's wonderful to see the BIS leadership here. If you look at a chart of Bitcoin, the major question here is the underlying value of it, unlike gold and, frankly, unlike fiat currencies, whether it's the French franc or the U.S. dollar. Do you, as one of the leading monetary authorities in the world, have a confidence in the underlying pricing of Bitcoin?
So, Tom, there is no French franc anymore, right?
Well, that's an important point. There's a lot of people that say, Benoît, that we're going to see Bitcoin drift away when the underlying becomes expanded and the value goes down. How does BIS deal with this debate?
I would agree with that. I think Bitcoin might be a good investment opportunity. I have no view on that. I'm not providing investment advice. That's not my line of business. But it does not have the features of a currency because you want to see currencies being stable, and stability has to be underpinned by policy. and policy has to be underpinned by politics. And that's why central banks.
I'm placing a stop on profit for British pound at 134.51.
I mean, there are lots of opportunities coming with retail CBDC or general purpose CBDC, as we call it. But there is potential substitution with bank deposits. Certainly, we don't want to undermine the banking system. We see value in our financial intermediation being done by banks. But there are solutions. You can put limits. You can hardwire smart contracts in the system. You can make sure that any digital currency will be distributed by commercial banks. Central bank doesn't have to be directly involved in that business. So there are lots of ways to make sure that commercial banks will not be harmed, and on the contrary, that they can leverage this innovation to generate new services.
So what would be the best way to track it and enforce it? Is it one wallet per person? Is it going through the banking system, or is it something else?
Look at the solution.
Position closed at 134.51.
Just to state the obvious, preferences for privacy, customer attitudes to data protection, data ownership can be different across countries. And that can, in turn, lead to different architectures for CBDC. But what I'm saying here at a fairly general level is that we want commercial banks to stay as gatekeepers of that system. We don't want to push them out.
Benoit Curé, thank you so much for joining us with the Bank of International Settlements and head of their innovation hub. Futures up 12, Dow futures up 125. The VIX not giving me much yet, 21.05 on the VIX. Bonds correlate with yields out 2 basis points, higher yield this morning. Coming up, as I mentioned, boy, he does not agree on the value of Bitcoin. Nouri Roubini of New York University Stern School, and of course, NorialToday.com. Mr. Roubini is fired up, to say the least. This is Bloomberg. It's Jobs Day.
Que esses governantes dirigem esse país pensando só naqueles que já têm muito e já têm demais. E é mais uma vez por isso que a gente optou por ocupar esses espaços, para que a gente lá de dentro possa exercer a mesma pressão que a gente já exerce na rua, de fora para dentro. A gente quer abalar essa estrutura.
Eu tenho muita esperança, tenho muita fé em Deus que aqui a gente ainda vamos conseguir a nossa moradia digna, a nossa casinha para, ao menos nos últimos dias de vida, se vender numa casa.
Welcome to That's Debatable, an interactive series on today's most pressing issues. This week's resolution, should we stop worrying about national deficits? We'll hear from both sides.
Every deficit is good for someone.
There will be automatic spending cuts if nothing is done.
And we'll get your perspective, too, with help from the artificial intelligence of IBM Watson. I'm John Donvan. Join us for That's Debatable, presented by Bloomberg and Intelligence Squared, Friday on Bloomberg Television.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
After pandemic, in the past, we have seen that in evidence, inequality goes up. The risk of inequalities within countries, like a tale of two cities, as Dickens wrote it, and inequalities across countries is very high. And policymakers ought to zero on that.
And inequality, part of our Jobs Day coverage. Again, Lawrence Kudlow with us after the jobs report. Ellen Zentner of Morgan Stanley before with some other worries. Carl Riccadonna scheduled to make an appearance, and that is a good and beautiful thing. There's a Jobs Day, and it will be a mystery. Right now, there is no mystery that it is good to have an extended time with Nouriel Roubini. His book on the crisis was definitive. His ability to get out front of the financial crisis was worthy. He and I had an important meeting in Davos 2 lifetimes ago over this. But now, Nouriel Roubini on Bitcoin. We just spoke to Benoit Cœuré of the Bank of International Settlements, working in banking. Nouriel, you are scathing over the underlying value of Bitcoin. What will be the catalyst that will expand the supply of Bitcoin, providing a lessening of Bitcoin's value?
Well, compared to other cryptocurrencies, the only advantage of Bitcoin is that its supply cannot be easily manipulated, because many of the other cryptocurrencies, the supply is increased by fiat, by the founders, while there is a cryptographic algorithm that determines the supply of Bitcoin. My argument against Bitcoin is not the one I have against other cryptocurrencies that are being debased at will day in, day out, is rather that it doesn't have any fundamental value. First of all, calling them cryptocurrencies is a misnomer. For something to be a currency, has to be a unit of account, a scalable means of payment, and a stable store of value. On all of these counts, neither Bitcoin nor any other cryptocurrency is a currency, first of all. Secondly, there is plenty of academic evidence suggesting that the price of Bitcoin has been manipulated. There's studies about pump and dump schemes, spoofing, wash trading, front running by exchanges. Well, it's really widespread. And there is specifically one stable coin, Tether, whose supply has increased this year alone by 14 billion, from 4 to 20. And every time the price of Bitcoin falls, the supply is increased. Nouriel, so we have good reason to believe that it's manipulated. Nouriel, and it doesn't have any intrinsic value. Okay, because of time, Nouriel, I want to cut to the chase, as I did with Mr. Cœuré, which is this belief that we can develop an adult cryptocurrency business without crime, without scam, and without the lack of transparency, the opaqueness within the global financial markets. Can we do Bitcoin and cryptocurrency without crime? Well, if you have the reinforcement of MAL and KYC, anti-money laundering, know your customer, then you could have some of these things being regulated, but then they would not be used for those shady activity. The problem is that I think that we're going in a direction in which there'll be introduction of central bank digital currencies. China is doing it. The European Central Bank has a proposal. Another 20 central banks have a proposal. And I think even the Fed, given that everybody else is going ahead, is going to have to do it. Once we have a central bank digital currency, every individual, not just banks, every business is going to have an account with the central bank. So we can make payments cheaply, safely, instantaneously with clearing and settlement. And therefore, a central bank digital currency is going to dominate not only cryptocurrencies that have no means of payment value because they're not scalable, but even bank deposits and wires and other alternative digital payment systems that exist today. That's the revolution is coming. That's the future of money and of currency, not crypto.
But what does it mean for, registration and enforcement? One of the questions that we were asking Benoit Cœuré is actually, is there a danger to the financial system? Is there a danger to stability? And if, for example, someone goes from France to another country and wants to pay in digital currencies, what does it mean for what data we need to collect on that person?
Well, the system with central bank digital currency is going to be that there'll be real MAL and KYC. Banks are already doing this job for any bank account. So if you have a bank account and then you are converting some of your bank deposits in an account at the central bank, the job of doing the MAL and KYC is going to be outsourced to the current financial system. Is doing quite a good job. So central banks are not going to go and verify every individual or every business and so on. So I think those issues can be managed quite well and easily in collaboration between central banks and the current system of commercial banks. Even the digital payment system exists right now. Say PayPal or Venmo or Square or Alipay or WeChat Pay, they're usually linked to your bank account, and therefore somebody is doing the MAL, and therefore if the transfer of money is cross-border, of course cross-border transfers always take longer because there is this MAL and KYC kind of issues that are less of an issue within a country transfer. But all those things can be managed, and there are already processes to think about what you're going to do when you have a central bank digital currency.
Yeah, when you look at COVID, has it really accelerated the cashless society by a decade?
It has in many different ways. First of all, touching banknotes and coins can potentially transfer the disease. Secondly, we've realized that there is a constraint on how much in countries that have a negative policy rate, you can go negative because you're going to have a reversal rate where the excess reserves can be converted into cash. If you have a digital currency, fully, a central bank digital currency, and you phase out cash, you can go more negative in terms of the policy rate if needed in an economic slump. And in many countries, the use of cash is disappearing. You know, in places like Sweden or in China, even the beggars in the street are using a QR code on their phone app to get a donation. So we're going to a society that's going to become cashless. Therefore, central banks have to start to think about e-money, and they're doing it. The only one that's behind the curve currently is the Fed that doesn't have even a plan.
Okay, here's what we're going to do, Nora. We're going to come back. This is such an important conversation, and I know this will be on fire out on social today, that we're going to do 2 blocks with Mr. Rubini. We're going to do 1 block on jobs in the market, and then about 6:12 or 6:15 U.S. time, we'll talk to Nora Rubini again, this raging debate about the value of Bitcoin. Thrilled that Mr. Rubini's with us. Also on the pandemic, Dr. Pekosh of the Johns Hopkins University.
It is possible we could have negative growth if this resurgence gets bad enough and mobility falls off enough.
We knew that things were going to slow down after the bounce back in the third quarter, and you're seeing that in the data now.
We're going to be well into 2021 before there's some sort of equilibrium that we achieve.
This morning, stocks lift the Dow through 30,000, 13,000 beckons for the NASDAQ 100. There is a new renminbi strength. Brent crude nears $50 a barrel. It is Jobs Day, and there's a great mystery. The trend in employment, it's not your friend. And the president of the, quote, last administration will administer a rally in support of 2 Georgia senators. Mr. Trump requests a, quote, signature verification match to quickly win Georgia. Nationally, Mr. Biden has received more than $7 million votes. Bonus round, Nora Robini will be with us in moments, and yes, we'll continue our discussion on Bitcoin. Good morning, everyone. A fired up Bloomberg surveillance in New York, in London, Jobs Day. Ellen Zentner with us later. And guess what? None of it matters. All that matters is fishing rights in the path from Boulogne-sur-Mer up the North Sea coast to get Scottish fish. Did I do that okay, Francine?
Almost. Yeah, you did good, Tom. I'm going to give you an A- for that.
A-.
You're right. It's about fisheries, Tom, but it's also about Michel Barnier going back to Brussels. Does it mean he, missed? There's one train. I didn't know this before today, but there's one train a day that departs London to go to Brussels. So, our reporters are literally looking at the train timetable and saying, okay, he's missed this train,
right,
so he's not going to back to Brussels. What does that mean? Now, he can brief ambassadors through video, so we're just really uncertain. People are saying we could get a deal by Sunday. Others saying, look, it may take a little bit longer, or it's not going great. So we're in watch and see.
Yeah, we'll see. The train, by the way, to Brussels is called Maria Tadeo on the Orient Express or something like that. Right now, let's get to it before we get to Dr. Rubini. Our first read news in New York City is Ritika Gupta.
Morning, Tom, Francine. Joe Biden says he'll ask all Americans to wear a mask for the first 100 days of his administration. The president-elect also told CNN he'll issue a standing order requiring face coverings in federal buildings and interstate transportation. Biden says he thinks all that will lead to a significant drop in coronavirus cases. On Capitol Hill, the chances are now higher for a deal on a stimulus package by year-end. A bipartisan plan endorsed by Democratic leaders as a basis for negotiation is now getting more interest from the Republicans. The proposal calls for spending $908 billion. That's less than what Democrats are calling for, but they say it's a starting point. And OPEC and its allies have finally found a compromise on output cuts. After 5 days of difficult talks, members agreed to gently ease into reducing production next year. Saudi Arabia's energy minister called the process tiring and excruciating. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg, Tom.
Ritika Gupta, thank you so much. We're doing this for Nora Robini as well. We're doing one statistic in our data check today, and that's Bitcoin. Everybody criticizes me because they know I'm not a fan of Bitcoin. There's only one price in our data check today. Bitcoin. They tear me to shreds, Francine. Vet Bill has had death threats over this. Okay, Bitcoin, 19,000 on its way to 20,000. Good morning, Matthew Miller. Francine?
Yeah, Tom, mine, I feel like, I missed a boat here. I missed a trick, like Michel Barnier, I missed a train. I wanted to talk about jobs and Brexit so you can see a bit of movement. But you're right. Let's just focus on crypto.
Well, there it is. Right now,
that was it, Tom.
Yeah, what we're going to do here, that's okay, my fault. I'm all fired up. What we're going to do here is with Dr. Rubini, we're going to discuss cryptocurrency and Bitcoin in our next section. But first, we must look at the changing of the guard in Washington. Nora Rubini is exceptionally qualified here. His public service to America within the Clinton administration. Nora, what do you expect from the Biden economic team? Can they do policy given Washington gridlock?
Well, first of all, I think the choices that he has made for the economic team, they're all excellent. Janet Yellen was my boss when she was the head of the Council of Economic Advisors. I spent 2 years in Washington. She's as thoughtful and wise as anyone can be, amazingly impressive, and all the other in the team are excellent. What they can do depends critically on what's going to happen with the Georgia runoffs in January 5th. You know, if there is divided government because the Democrats don't have a majority in the Senate, then of course there'll be constraints on what you can do with legislation. Certainly the increase in income taxes for the wealthy, in capital gains, in carried interest, in corporate taxes from 21 to 28% will not occur if the Democrats have divided the government. Also part of the economic stimulus, we'll see whether we reach a deal during the lame duck, but it's going to be less than $1 trillion. Probably the economy, given this weakness in this quarter next, needs more than $1 trillion. And Biden has also important plans to spend up to $1 trillion on infrastructure and lots of money on the green economy. Again, if there is divided government, you're going to be able to do less than otherwise.
I am fascinated, Nouriel, in our discussion of economics at this moment, December of 2020, how in paragraph after paragraph, I see little on dollar dynamics. Should we be concerned of dollar weakness? Is there a surprise out there that public officials do not see coming?
Well, my expectation, like most people, is the dollar is going to keep on weakening because the Fed is extremely dovish, and even more dovish than ECB, BOJ, and other major central banks. Secondly, we're running twin current account and fiscal deficits, while in Europe and Japan, you have at least current account surpluses. 3, we're going to stay with these accommodative policies for longer. And if the Democrats cannot do to achieve growth as much with fiscal policy, by definition, the central bank will have to do more of the job of lifting the economy to the target of growth, employment, and of inflation. And therefore, we're going to have QE for longer and lower for longer with zero policy rates. And therefore, there are a whole bunch of other factors as well. Also, the use of the dollar as a weapon against strategic rivals, sanctions, and so on. They imply that countries like Russia, China, and others are diversifying away from dollar into other assets like gold and so on. So I see dollar weakness continuing gradually. I don't expect a collapse of the value of the dollar, but I think that dollar weakness next year is the likely scenario for the US dollar. It's going to create problem for the ECB and the BOJ because their currency are appreciating at a time where their inflation is well below their target and falling towards zero, if not negative. So the question is how much more than ECB and BOJ can do to try to counter the strengthening of their currency relative to the US dollar.
Okay, so Nouriel, longer term, if there's a general trend of weakness for the dollar, what does it mean for other asset classes? But let's not look at, beginning 2021. Let's look longer term. How will the dynamic change?
Well, if the dollar is weakening in part because we are in risk on and there's going to be a global economic recovery, probably there'll be a rotation from U.S. equities to global equities that they've been underperforming. And of course, if you invest into dollar assets with the dollar weakening, then you can have a potential capital loss in your own local currency. So, and the weakness of the dollar probably implies also that the dollar price of commodities is going to be higher. That's good for oil. That's good for industrial metal. That's good, of course, for gold and precious metals. From an economic point of view, actually, a gradual weakness of the US dollar is good because we're running a huge current account deficit. In the US this year, most likely 2.6%, the opposite in Europe. And most of the earnings, or at least 40% of the earnings of S&P 500 firms come from their foreign operation. And therefore, weaker dollar makes actually these earnings worth more in dollar terms. So that helps also the stock market in addition to improving the trading balance. And if you want to reduce trade tensions between US and China and Europe, therefore that implies that the dollar has to weaken to compensate for the large bilateral and overall external imbalance of the United States.
Okay, but Nouriel, overall, so you at the beginning of the pandemic, you were very worried about the long-term consequences of what we were living through, talking about a decade of misery. Because we're close to vaccines and they could be rolled out, how much easier, how much shorter will that misery be?
Well, my concern longer term is about other things that are going to be negative. We have a world in which private and public debt has been estimated recently have gone last year from 320% of GDP to 365, and 2 years ago to be 400. So debt and defaults are going to emerge in the public sector, in the private sector, in many parts of the world. There'll be households, there'll be corporates, be financial institutions, there'll be some sovereign. Of course, those who can monetize fiscal deficits are going to do so, but monetization of large fiscal deficit eventually, not this year, not next year, because we have slack in goods and labor market, but eventually could be inflationary. And therefore, over a horizon of, say, 3 or 4 years, I can see inflation rearing its ugly head, especially because we're going to have also other phenomena. They're going to be negative supply shocks, like decoupling between US and China, deglobalization, protectionism, aging of population. Those are medium-term concerns. They're going to emerge, and they're going to create trouble in the global economy. But that's a story for the middle of the decade.
Nouriel, you and I sat at the Belvedere Hotel long ago and far away, and we noticed a regression from the mean in derivative securities, in synthetics on synthetics. What are the new synthetics? What is the fragility out there that big banking doesn't see right now?
Well, we had a massive increase in corporate debt in the United States. Right now, that corporate debt is partially backstopped by the Fed, but only for fallen angels and high grade. And a lot of the funding occurred essentially in the shadow banking system rather than regulated, right? CLOs and a variety of other instruments that were created in the capital markets rather than the traditional banks. People say that the problem has been backstopped by the Fed, but the Fed, in my view, is not going to continue this facility, especially of purchasing and backstopping the corporate debt market for much longer. And certainly they're not going to be backstopping the very low-grade part of the high-yield space. And we still have a huge amount of debt that has been increased this year, given the borrowing that has occurred in the private sector, especially the corporate sector. And therefore, in an economy, in my view, it's not going to be a V-shaped recovery. It's going to be a U-shaped recovery because both households and corporates have to deleverage. Those that have high debt. That implies that the risk of bankruptcies and defaults and rising NPLs and pressure on the high yield, the bottom part of it, is going to be still a serious issue we have to worry about.
Nouriel, look, we gotta come back. Matthew in Berlin says, shut up, Tom, and ask Nouriel about Bitcoin. So we're going to do that here in a moment. Dr. Rubini with us, and yes, we'll speak about Bitcoin and the underlying value of Bitcoin coming up. After the jobs report, Lawrence Kudlow from the White House. Stay with us on this Jobs Day. Ellen Zentner with us as well. This is Bloomberg. Good morning.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Bitcoin might be a good investment opportunity. I have no view on that. I'm not providing investment advice. That's not my line of business. But it does not have the features of a currency because you want to see currencies being stable, and stability has to be underpinned by policy, and policy has to be underpinned by politics.
The esteemed French economist Benoit Cœuré, working with the Bank of International Settlements on a separate matter, which is how banking will look at digital transfers, digital currencies. Nouriel Roubini of NYU Stern, and also, of course, is NourielToday.com, is not looking at banking transfers. He's looking at the underlying value of Bitcoin. Nouriel, part of the operation here is who is the who of Bitcoin? If Bitcoin holds value, or if the denominator expands and we see a devaluation of Bitcoin, who is the who that will affect that?
Well, you know, first of all, I agree with Cœuré. It's not a currency. It's not a means of payment. It's scalable. It's not a unit of account. It's not a single numeraire. It's not a stable store of value. So it's not a currency. But it's not even an asset. An asset has to either have income, capital gain, or some uses. Stocks, bonds, real estate have income, have capital gain, have uses. Like, for example, real estate provides you housing or storage services. Gold doesn't have income, has capital gain, but also has utility, jewelry, and has its use industrial, like silver. Well, in the case of Bitcoin, it doesn't have any income. It doesn't have any use as a means of payment or as a unit of account or a numeraire, and its potential give you a capital gain or capital loss that is based on no intrinsic value. I mean, usually you have a price and then you have some earnings, some dividends, some income, some rent, some something to value something. Or if you don't have it, there is some use, like means of payment. Well, Bitcoin, like the other cryptocurrency, has none of those characteristics. So defining it as an asset is not even an asset. It's a purely speculative asset. It's like a Ponzi game where the value goes up only if there are other retail suckers going to buy while the whales are dumping what it is. So it doesn't have an intrinsic value. So it's not a currency, it's not an asset.
My book of the year a number of years ago, Nouriel Roubini, was Ken Rogoff's incredibly courageous The Curse of Cash. And he talked about a cashless society, and he constantly circled back to the criminal activity of Bitcoin. From where you sit, is Bitcoin supported by crime?
Well, first of all, it's supported by manipulation. There are academic studies showing that the price is being propped up by Tether, that is a pseudo-stable coin that has been issued by fiat, by a shady organization that is now under criminal investigation in the United States. Every time the price falls, they create out of nowhere more of this Tether that is used to buy Bitcoin, first point. Secondly, actually, law enforcement authorities prefer to crack down on crime when it's done via Bitcoin or cryptocurrencies, because it's quite easy to see eventually who's behind that public key and who's behind that private key. And actually, from a law enforcement point of view, it's more easy to go after the dark web and lots of other stuff in cryptocurrencies. They claim that they're anonymous, but they're not truly anonymous. And therefore, that, in my view, that's not a concern. The argument is that we're going to have a central bank digital currency that's going to dominate any private payment system, including cryptocurrency, because it'll be safe, instantaneous, cheap, and absolutely settled and cleared in a moment. And these central bank digital currency are not going to be based on blockchain, because blockchain is supposed to be public. These are going to be private systems. It's supposed to be decentralized while be centralized. A blockchain is supposed to be permissionless, while it's going to be system is permissioned, and blockchain is supposed to be trustless, while these systems are going to be based on a central bank and a few trusted verifiers and authenticators like commercial banks. So people get excited when central banks are talking about central bank digital currency. They say even central bank got converted into crypto, has nothing to do with crypto, has nothing to do with blockchain. It's going to be a centralized, permission, private, and based on trusted authority verifying transaction, not a bunch of shady miners in jurisdiction where there is no rule of law, because 80% of all crypto mining is occurring by miners that are located in China, in Russia, in Belarus, in another jurisdiction. And that's why this is becoming a national security issue for the United States. the White House and other law enforcement authorities are worrying about the fact that the mining of cryptocurrencies is occurring dominantly in a centralized way in a bunch of jurisdictions with no rule of law that are strategic rivals of the United States.
Okay, so going back to the central bank, right? And you're definitely fired up about this, Nouriel. You're always fired up, but I have to say, particularly when it comes to some of these cryptocurrencies. So what will these digital currencies look like that central banks are working on? Like, would there be an overarching? Who's actually the right the right entity to make sure that they're using the right thing?
Well, first of all, in the current system, only commercial banks have an account with the central bank. Once we have a central bank digital currency, every individual, every household, every non-financial corporation and business can have an account. So we don't need to use Venmo or PayPal or Alipay or WeChat Pay to make payments. We don't need to use bank accounts and deposits. And there'll be another system for payments that is instantaneously safe and cheap. Secondly, the MAL and the KYC is not going to be done by the central banks, but anybody who has a bank account is already verified with the right anti-money laundering and KYC can have an account with the central bank. So you're going to delegate to the financial system the job of making sure that the transactions are occurring safely within countries and across countries. So there'll be an important role of the traditional financial system in doing so. And the future of finance is not going to be crypto and decentralized finance. It's going to be fintech, where there is a revolution in payment system, in credit allocation, in insurance, in asset management. And fintech is based on AI, on big data, on IoT, and digital ideas are going to be all centralized. So the systems are going to be all centralized. The future of money and finance is not decentralized, it's not crypto, it's not blockchain, it's all centralized. There'll be lots of innovation, nothing to do with blockchain or crypto.
This has been fabulous, folks, to see the delicacy of Benoit Cœuré of the Bank of International Settlements, and then Dr. Rubini with us. Professor, thank you so much for joining us this morning. I know Twitter is on fire over this conversation, and this is what we love to do. To have Benoit Cœuré and Nora Rubini back-to-back is very special. As well, Ellen Zentner of Morgan Stanley to join us here, their chief economist. Maybe she's our chief economist too. Ellen Zentner, not on Bitcoin. Ellen Zentner on Jobs Day. Stay with us. Futures up 12. This is Bloomberg.
So the reason we're interested in Post Office Rock is just the extreme nature of the erosion that is ongoing here. In the last, well, since 1940, it's eroded about 100 meters and in quite a unique fashion. By having a map of the seafloor and hopefully being able to capture some movement in these transverse dunes, we'll be able to see after the erosion where the sand is going and why it is not replenishing the coast as sometimes and most often happens.
With continued sea level rise and future climate change, we're just going to see much more of this kind of event taking place. So it's a good proxy of what we expect to take place much more commonly by 2050, 2100 than is currently the case.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Bloomberg Surveillance, it is Jobs Day in America. Lots of other news flow as well. In particular, we're watching for any news on the pandemic and on the hospitalizations across America and, frankly, across all of this world. On the data front, a lift to the market. We see that with Dow 30,000 in futures, Dow up 119, SPX futures up 12, the VIX 21.07. It'll be amazing to see a 19, even a 18 handle on the VIX if we get there. Yields correlate. Up 2 basis points, 0.93% on the 10-year yield. Dollar weaker in the range, but nevertheless, little hints there of further dollar weakness. I'll let Francine go all Brexit on you. Renminbi 6.53, strong yuan this morning. Francine?
Going all Brexit on you. It sounds like a Beyonce song, Tom. So we did hear last night that the British were crying foul as Brexit negotiations, according to them, hit a last-minute snag. I have to say 12 hours or maybe 14 hours afterwards, and we're none the wiser about what happens. But we certainly saw a bit of whipsaw when it came to cable. 134.58 is where we're now. We know that Michel Barnier is still in London. He may brief ambassadors through video. We don't know if we'll have a deal. We could have something by the end of the weekend. Then, of course, we look at U.S. jobs in the U.S. Also coming up on Bloomberg Markets, Stuart Butterfield, the Slack chief executive. They'll talk, of course, about what's happened this week with Salesforce. This is Bloomberg.